Hey guys, good morning, welcome to another live session of Stocksnipertrading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra-low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HCMC Greece, compliant with ESMA. EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome. Good morning, everybody. Welcome. Thanks for joining, everybody in Zoom. Thanks for joining, guys. Everybody on YouTube, welcome. It's our live London session. And right now, we can see right now we have a big bullish open. Right now, 3 a.m. Eastern, like 3 minutes ago, this is London Market Open. So we have this big bullish candle that just pushed for some new highs in London Market Open. Same with DAX, but there's a big retracement. So we had a big bullish candle make a high, and it's coming right back down. So please, guys, if you are trading London Market Open, if you are in any current trades, trade responsibly. I'm going to be doing a top-down analysis on US 30, DAX, gold, oil, and GBP USD. So if you guys can please manage your own trades, this is what can happen when there is these type of market opens, whether it's London, it's Wall Street, it's power hour, it's a news, like a red folder. There is some volatility, like look at the range of the candles compared to how it was trading before leading in. So there's a big push of volume that comes in London. And guys, over here on the right side of the chart, this is called Bookmap. It's a live liquidity platform. It shows us the offers in the market, the bids, and this is the depth of market, DOM over here. It's the order book. This is what's called order flow trading. I'm going to keep it on the Dow Jones YM, and next week maybe we're going to start to switch it up a little bit. Once you guys get comfortable with this, maybe we'll show how it moves with gold when we're looking at a gold chart. Maybe we'll show how it looks like crude oil when we're looking at crude and things like that. Okay, and so I just want to say thank you for everyone joining. It's been an amazing week so far. Today is Friday, so let's trade responsibly, everybody. Fridays are known to be fake out days. Trap retail traders, sometimes they're difficult to trade, so just please, with respect, guys, to your account, trade responsibly on a Friday. You want to get in a habit of reading the markets on Friday, trading good, trading responsibly, not doing anything silly so that you don't ruin your account going into the weekend. And also, not just that, but it ruins your psychology too going into trading in the next week. So you want to end this week on a positive note so that you can carry this momentum into next week, and then you can have another good week next week. So thank you for joining, everyone. The date is Friday, May 12th. Juma Mubarak. Thank you for everyone that's joining, and let's get started. Okay, so I'm going to get started over here, but before we even look at any charts, let's take a look at Forex Factory. Just to see what type of news we've had. So pre-London, 2 a.m., the hour just before we got started, there is a lot of British news. A lot. It started with a red folder, GDP, gross domestic product, month over month. Where it came out actual was negative. They were expecting zero change. Like previous was 0.0, forecast 0. This is actually not good. This is negative zero point 0.3 GDP for the British pound. So not good. But then there was other folders in here. So when you have a mix of all types of folders, then you might get mixed reactions. Like one could start off red, then all of a sudden you get some more green folders, which might make up for that difference of the red folder. So then things can start getting a little erratic. But a lot of news came out in pre-London, so that's done now. We're past pre-London, so we got to look over here, going into 3 a.m. So we have FOMC member Bowman speaks in USD. It's not Powell, doesn't have as much significance as Powell, but still we've got a member from the FOMC speaking right now. And then our next GBP news is at 7:15 when we start getting ready for our New York session. And then the other big folder that we have to look at is 10 a.m. preliminary, the University of Michigan Consumer Sentiment Report at 10. So we've gone through a lot of the London volatility, but we still have some news that could impact the market. So let's now look at the charts, okay? And right now, with the London market open, it is opening up bullish, okay? So we have also US 30 looks nice and green, and Dow is moving. Take a look at, you can see over here 2 a.m. So the pound, this is the pound dollar, it was dropping before the news, and then when the news came out, the pound started to pick up. So, sometimes when you're always looking at the news, traders asking, Ron, shouldn't it be red? Why is the pound going up if it had bad red folder? Because there was other folders that were green, and there was a lot of them. So sometimes it's not always just what the folder says. I follow price action because I've been screwed over multiple times by trying to analyze that news and going with the exact numbers and thinking in my head how it should be moving. And sometimes the market doesn't do that. So I like to just follow price action and order flow of the market. And I also like to know when there is news in the market, what type of volatility it can bring. But ultimately, guys, try and follow price action, locate your supply demand zones, know when there is news, and things like that, okay? So let's start off with US 30, start with a full top down. So if you were trading with us yesterday in mid-afternoon, the New York session we had, it was a pretty good session, but we had to be very, very patient to get that move. So with trading, you got to be patient all times of the day when you're trading, whether you're trading London right now, or you're trading Wall Street, or you're trading the post-afternoon New York session going into the close of the market. You have to be patient always and disciplined, okay? There's no rushing trades. Take your time and everything will work out as long as you're not over leveraging your account. So if you've been trading with me lately, I keep going over this, okay? So start of May, we had this 4-day downtrend, and then you guys probably all remember Friday, May 5th was NFP. US 30 had a big bullish day. We came up here, we closed, and you see how we have a wick right here, less than 50% of the candle on Tuesday, May 2nd. We came up, got rejected. We came up 2 more times over here, we got rejected. We came up again Wednesday of this week, and we got rejected. So safe to say, there's a lot of resistance that could turn into supply going forward into the future of the next week or the week after. But we did come down yesterday. Okay, so yesterday was a bearish day. That was our low, and it came exactly right where NFP Friday opened at that bullish ignited candle. And when we came down there yesterday, we came right back up and we closed here. So we still have lots of red volume still above us, but when we closed with momentum going into the close. And here's the open of today's candle for US 30. So it's opening as a ignited bullish candle currently today in the market. So we're going to locate today's low with a purple line, and that's showing us that that's our ignited bullish candle. So far we came up all the way up to here. It's roughly 50%, almost 50% of yesterday's red bearish volume. So there's our high of the day, 33,387. And if we continue with this volume, like in London, and maybe we can push and start to fill and engulf yesterday's red body, then maybe we're going to continue to push up to this wick right here, 33,460. Maybe we fill this range right over here up to the yellow line, like right over here from the purple to the yellow. And when we come up there and we start to fill, then we've almost engulfed yesterday's body. So maybe another critical area is where it transitioned from the close to the open. That's around 33,500 level. Look at Bookmap now. Now you can see it came up here kind of to 33,450. 36 offers, double top up there, trapped all those buyers, and now look at it coming down. Okay, so London could be a fake to the high, and now they're taking it down. Okay, so you have to be very careful, guys, what they do in these sessions. Okay, they show like it's very, very bullish, and they show you that, but they're coming to maybe take out the pending orders up there. So if you go into profit 5, 10, 15, 20, 30 pips up there, you have to understand what could happen in the markets, guys. Okay, so continuing to go up, I'm just getting my levels ready for today, because I keep my chart going in when I like after this session. If I was to go to sleep, then I leave my chart the way it is, and then I come back in New York, and then I just maybe clean it up, but I leave all of the critical levels. And then I'm identifying an area of supply up here because of the rejection, 4 rejection wicks, this one, this one, this one, and this one. I can go a little higher. I could go exactly right up to there, and it makes a lot of sense to me. It's 50% of this big bearish candle. There's 50% down. There's all the red volume bringing it across. So if we ever come back into here again, I'm assuming that it's going to get rejected here. It might be like a double top where it came up here, came back down, maybe a base over here, maybe it does come back up here later next week, and then we get rejected and then come back down. But we're getting rejected right now. So maybe this is London's high. They've kind of pinned it for the day. Maybe they're going to continue to push it down with some pullbacks. But if we take out this big volume base of this candle, they exhaust these buyers, we break our low of the day, maybe we come down to here, 33,230. We come down to Wednesday's low, midweek low, and we continue to push. Maybe we come down to yesterday's low and all of these 2 bodies right over here in this area. That's a big critical area there too. And then if we can't hold yesterday's low, may come down. You have this wick right here. But then there's this bigger gap between here, this big volume based candle. It could fill down there, but if you don't have any other data, you could go half of this distance, or you could come exactly right over to look to the left of the chart over here back in February of 2023 and look at early March of 2023, and you can see that there is 2 wicks exactly right down there. So it's a little bit less than 50% of that area, but we've got a wick, a body, a wick. Maybe it comes down to 980, just below 33,000, and maybe it comes down there. And then below there, we've got this bullish body that kind of started to move, and when it retested, it held. So when I'm looking for maybe another demand zone that could hold if the volume gets down there, could be right around in this area. So I locate it with a demand zone, and I watch to see if the volume can come down here and do something like this, like a wick over here, and come right back up. Okay, so we pulled back. Okay, they came back, but didn't really break this structure over here. So it held 33,400 and they're accumulating the bids back up again. So maybe this could be a strong move. Coming back, they've picked up the liquidity and then they're coming right back, maybe to test that London high. So maybe, you see how the candle came down, now it's filling on the daily again. So maybe it is going to be a strong day, and it's going to continue to break through that London high. So that's why sometimes if you're not in the market, you're observing, okay? You're observing what's happening. So these are now the hourly candles. So we can see the big drop happened Thursday at 9 a.m. Wall Street, big drop. And then 10 a.m. and then the rest of the day we tried to come back up. This is when we were trading in the afternoon. We kind of caught these candles coming up, and it continued to move into the Asian session, continuing to make higher highs. London right now, look, we've almost engulfed right there all of yesterday's Wall Street red volume. We've came up. It took almost an entire day, but it's coming up there and can test it. So if we break, our next hourly resistance is right here, 33,414. Let's put a white line up here just to keep an eye on it, because this is where we could come up to. See, now it's trying to break up here again. Those 36 offers are still sitting there, so we're going to see if we can tap into those and pull them out of the market. Okay, like right about here, that red line. And if we can push and break, maybe we're going to come up to, did you just see when there was 36 there, they just got pulled? So maybe they're going to lower them down into here. So we'll watch. There was 36 just showing and it just got pulled up there. So we'll continue to watch. If we break, we are in this hourly trend right now that's kind of forming from over here. When the market closed at 4 p.m. Eastern, so now we have this hourly trend that is still holding like this. And we kind of broke this area right here. So our hourly support in the market currently is holding right here. Now let's go into the lower time frames, 5 minutes. But we still have to recognize that there is still a lot of supply pushing the market down, but we're coming to a critical level right now where we can engulf yesterday's Wall Street candle and move. Now we're breaking out of here, okay? So it came down, picked up the liquidity. We took those 36 offers out of the market that were here at 33,450. It's turned into 9 bids. So this is momentarily where we kind of flip the order book. Now, if below us, if we start to populate with all of these bids in here, then maybe we're going to continue to transact up here and take out more of these offers above here. Oh, it's got to build now. And we are currently above the VWAP, so it came down, and this looks like a big liquidity grab to the low, and now we're looking to take out the high, but we want to build on this too, because if there's pullbacks, we want to pull back into a nice healthy pool of bids and continue to take this market up. So let's see how it looks on the 5 minutes. This is the 5 minutes of US 30. So there you can see exactly what happened. Those two tops at the high of the day, kind of right over here, where those buyers got caught, and then it pushed down, and that's enough to hit their stop losses all the way down there. Because you can imagine if you're buying up there at the high, it pulled back about 50 pips. So most retail kind of gets stopped out at 50 pips. But it came down here and it held this area of support in the market. Right here. So it kind of held that support level. It came down, respected this area, which was support in the past. That was building all through midnight, all the way leading up till now. So it respected it. We opened bullish, ignited. We just took out the high. Okay, so it made a new higher high. But sometimes when we make new higher highs, there's offers. There's always going to be offers at areas where we make highs. And we came up there and it's pushing down again. So we got to watch how this volume will close right now. How will it close? Can we make another attempt to get back up there? So right now at that purple, it's showing some resistance here at our previous 2 wicks and our wick right now. So I put a red box up there just in case we get back up there again. Look at the volatility in the market, okay? So you can see big ignited red candle pushing right back down. So maybe we're going to consolidate from that high now, maybe at this hourly white line. We had the liquidity grab the wick down there, but the volume stayed above. So maybe this could be consolidating area. If we do come back above here and close, then maybe we're going to come up. That's that hourly white line that I have, 33,415 area. And then if it continues to push, our next 5-minute resistance is right over here at 33,440. Then it's that next daily area. So if it can continue to build and pick up more bids and accumulate, maybe we'll come back up and maybe we can close above this red box, and maybe we can continue to take it higher to the next hourly resistance, and quite possibly maybe next to that 5-minute and maybe to that next daily area. But we need to see more volume close above here. We've came up, we got rejected 2 times, equal highs, then it came down, picked up more liquidity, came back up again and tried with that volume, but it was enough to break the high and come a little higher, but then it got rejected again, and we pushed all the way back down, but it's still holding, but it might accumulate in here. Okay, so what we're also looking for, maybe for a potential push down and maybe a sell opportunity, is if we can break this hourly trend line, take out that previous low and this entire structure, then maybe we can start to push down and revisit the daily low, 33,290, and maybe we can break down further and maybe have a potential sell in the market below here. We'll readjust everything as it continues to move, but right now it's coming right back up. This candle is going to close in 2.5 minutes, and we have about 7-8 more minutes to go, and then we have our new 30-minute candle opening. So you can also follow the 30-minute candle of London. It came down, picked up that liquidity, it's coming right back up near the high. So we're going to see if this big 30-minute candle can close above this purple daily high. Maybe we get some 30-minute volume up there. Maybe we'll continue pushing on our next 30-minute candle. We have a lot of room for this thing to move. So this close is going to be very important, and where we close above like London's high, this red box. Okay, so we're going to continue watching this for 2 more minutes. We'll keep it right over here beside DAX. So that's what I'm going to do next, is we're going to look at DAX. So DAX is moving a little bit different. Okay, so this is US 30 coming near the highs, and look at DAX. It got rejected up here. It came up again and got rejected lower high. It came up again lower high and got rejected. Big red candle push all the way down to this structure right here. Hold. It got a wick. It came back up. It closed. It came back again. About 50% of the body just below it, and continued to push down. Closed below the low. We came down red. So it took out this low. And now it's coming right back again. Up. So if this continues to push down, DAX may sell off. Okay, so they are moving a little different. Okay, they're not the same securities. This is the German stock market, and this is the North American Dow Jones. Okay, so they tend to move simultaneously from time to time, but that's not always the case. A lot of traders think these things are always correlated. If US 30 is moving bullish, GER 3040 DAX needs to be moving in the same way. That's not always the case. This is completely different securities. German 30 has like Volkswagen, Mercedes-Benz, and like Porsche, and more Audi and BMW, and more German companies. And then over here, US 30, we have all American companies. Okay, so completely different securities. Okay, so I'm just going to follow the close of this candle. And then we can see where they're making a little bit of support right over here on the 5 minutes. Like about right here, there's making a little bit of support. So there is a little bit of bullish momentum, like right below here and above that hourly level. So there is a little bit of support right here being built. We're opening bullish. Okay, it's an ignited candle that could pop. Okay, so we could you could look for a continuation buy up here. Yep. Okay, so this could be an impulse break right up to that hourly with this momentum. and DAX could possibly look to break this resistance point and come up to this wick. I'll get charting on US 30 in just one moment, or sorry, DAX. Just want to see if this thing can, if this body can break maybe up to that hourly. So if you're in buys, guys, okay, it is breaking out of here. But remember, for continuation, this is the impulse candle. So if you are in current buys, getting rewarded for this push. But we also have to see if volume will close above this area when this candle body closes going into 330. Okay, remember, if we can close above that hour, that purple line, and you see how we're taking out the offers, and this is where the heat is up here. So we can possibly come all the way, transact up in here, and this is where most of the offers are. Okay, so if you guys are good and you guys can follow this yourselves, if you guys are in buys, please watch this. Our hourly resistance right here, 33, 4, 13, 14. Yeah, boom. Before I spoke, we just hit it. Okay, so you can see how we're transacting right into that heat up there. Okay, so that's perfect. We came right up to our hourly resistance, and that's where that hourly resistance is in the market. So if we break, look, if we can take out 476 and 480, there's 13, 24, 12 offers. If we can take those out, that 33,500 level is the next level. But right now, we're possibly going to get a wick, okay, because there's a lot of offers up there. So there's going to be a wick. And then we got to go through the motions again. When it pulls back, our bids are accumulating below us. We're above the VWAP, so there's always, guys, get used to when you're trading about pullbacks, okay? So you're not always thinking that every time you get into a trade, it's going to be a big green candle and just go up. There's going to be times where it pulls back, but as long as everything looks healthy, like this today, this is good, healthy pullback. When it came down, picked up that liquidity, it made that new higher high, it came down, respected this level, went right back up. We opened strong, no pullback, and now we're creating a new higher high. So it could pull back again, but we're looking to hold structure going into 330. But we found some hourly resistance. Guys, this is called Bookmap, this platform over here. It's a live liquidity in the market. We have a link that you can use in the description. You can use a free demo account and learn. You can have BTC, Bitcoin, and watch how Bitcoin moves, and you can learn how the depth of market works. Free demo if you want to. It's with crypto, it's Bitcoin, but more importantly is you can learn how order flow works. So you can watch Bitcoin. You don't necessarily have to trade it, but you can watch how it's moving, and then when you get comfortable with it, and then if you want to use it for more of the securities that you trade, then you can subscribe to it. Okay, so you see how we filled up to that hourly. That's why I placed the white line there. Okay, we got it from the hourly analysis. So it's coming right up there. That's a nice little zone fill for some scalpers that are just scalping this zone, taking that candle as it was breaking out, when it said it was a good area to buy. It came approximately 20 pips. So just from here to here, that's about a 20 pip scalp, unless you've been buying these candles over here. Okay, and then if we do get rejected and maybe in the next 30 minutes we come down, we might transact in inside this consolidated area. But if we're starting to look for sells now, maybe I can start to bring my sell order a little higher. Like maybe if it breaks this demand structure, can get ready to position myself in a sell, and maybe if it breaks down, can come in here. Okay, so this is a new 30-minute candle. It's 3:30 right now. It's another bullish ignited candle looking to break out. That's what I'm saying, guys. Watch this area up here. It looks like it wants to come up, maybe transact up here. And then we have a lot of offers, 33,500, 488. Again, it might come inside here and catch a wick. But right now it's ignited. It's continuing to pump, guys. Okay, there. Wow. This thing is a bulldozer just driving through all of the offers right now. Beautiful. I took that impulse buy and I'm still holding, but now I'm gonna scale out myself too because it's coming up into here. Rob, you got 30 pips and counting. Nice. Yeah, good job, guys. I got in a little late. I got in over here, but still, it's beautiful. Yeah, 30 pips. Yes, we might pop right up to that red line, but I'm not going to get too greedy, okay? Because I'm watching right up here. Look at right up there. If it taps that red line, like anywhere near here, I'm getting out. Yeah, there's the wick already in the offers, but beautiful. I got out, guys. I'm happy with that, okay? Guys, I don't know if you know, but it's 3:30 a.m. Eastern for me. So it's real early. And when I can get in a trade like this with zero drawdown, take that candle and grab those pips, I'm getting out. I got in late too. So that move is approximately 40 pips from the breakout, okay? So we had a strong continuation on that 30-minute candle. Now, possible like sell position. It's getting extremely overbought up here, 77. We're walking into some big offers where they might shut it down over here. Maybe I'll entertain maybe a sell if it can close below this green box, retest, and then I'm going to trade the consolidated area. But looking for it to pull back, maybe back down into this green box and break down to here. Okay, so I'm out of this trade, guys. I entered right here and I got out there. Total 35 pips. I am out. Okay, because I see the big order, the psychological area, 33,500. I don't want to play games in here. Okay, that's what depth of market helps with. It helped us understand that we got up there. Now there's going to be a pullback. Okay, so the pullback might come back down to the white line. If this holds, and holds, yes, it might continue going for a new higher high and continue breakout out here. But I'm happy with 35 pips myself. It could continue to go. Maybe I should have held the woulda, shoulda, couldas. I don't play that game. I play the game of getting in, getting some pips, and getting out. Marwan, you took that position. Good for you. Yeah, great. Great way to start a Friday. Nothing wrong with that, guys. Okay, sorry guys, I didn't get to DAX, but we're watching what it's doing. Okay, it's moving bullish as well. So if it can close maybe 50% above this red candle, maybe we can continue to push up to here. Why not selling from 33,500? You can absolutely sell. No one is telling you, Marwan, not to sell. You can sell, but you have to understand that it might be a pull down, a pullback, and then it might pick up bids, and then all of a sudden it's driving right through your sell order. Okay, so for sell, I personally look for structure to break. I don't just sell like a wick of a candle or just one single bar. Unless you're looking for 5, 10, 15 pips, that's what you're looking for, okay? Not everyone is that type of trader. So they might get into a sell, and all of a sudden the body's building and it's going back up and continue highs. Like if you do that in New York, if you sell single candles, you could be in a lot of trouble. So I don't kind of trade like that. But if you absolutely want to sell, you can go right ahead. No one is stopping you here. Okay, guys, so I'm gonna move over and do the top down on DAX because we have a few securities to look at. We still got to look at gold, oil, and GBP USD. Okay, so we can see kind of got rejected over here at that 500 level, and it's the psychological level. So the market is attracted to come up there and transact in there. Okay, so now it's pushing down. Now you've got that big rejection wick and a bearish engulfing candle down. So Marwan, if you did sell up there, that's great. You made a great call on the sell as well. Okay, but not every trader can trade like the way how you did it, because sometimes they come down. Like that's a 25-30 pip if you sold the top of the candle coming down. But sometimes what happens is it just comes down, and then we come into a pool of bids and it can go right back up. So sometimes like this, if you're selling, it might have to be like a pip and dip, because it could come right back up. Like if you've seen the last afternoons in New York, if you're selling those type of pullbacks, you're getting trapped and you're getting killed, because we broke through all of those continued. So I look for more to really sell the market. If it comes up, pushes back down, maybe it comes back up again like a double top, more supply, then we actually break the critical neckline, then we broke structure, then maybe we get that push down. But if you're starting to initiate the sell up there, there's nothing wrong with that. But just understand that when it comes down, you're coming into a pool of bids that could come right back up. So just careful, guys, when you're doing that. But you guys are welcome to trade whatever you guys like here. Okay, so I'm gonna now do top down on DAX. Sorry, if you guys don't mind. Okay, so DAX on the daily. Okay, this is what we got. DAX trading a little bit different than US 30. Okay, completely different. Remember, May 1st, 2nd, 3rd, 4th was those nice 3 bearish days. This one's a little bit different. Okay, completely different security. Friday NFP had a strong day. Look at all our high wicks. So we got rejected up here, here, multi rejections up there. So 16,000, that psychological area. We can all just look at it like visually. Do we all see this area is an area of resistance in the market? And I can take this with me for next week, next month, next year if I want. It's a zone. It's static. It doesn't change. The zone is there. The only thing that changes is volume. Okay, we came up here, rejected. Came up 1, 2, 3, 4, 5, 6 times, got rejected. Now it's starting to get lower high rejections. So maybe these offers are starting to come down lower. And this is Thursday. This is our weekly low in here, and then we also have a lot of support down into this area here too on the daily. Okay, so right in here, if you look at 50% of that base of that candle, it came in here, held those wicks, held right in there. So if I bring a big green box across on the daily on DAX, now we've kind of momentarily located our demand and our supply. Now we're trading inside, we're flagging this entire area since April, middle of April, has all been just consolidating. So maybe in the future we're going to see a build up and DAX will break out above 16,000 to the highs, or it could break this level and we shoot down to 15,500, maybe down to 15,000 down into here. But right now it's building still. So today, you see guys how we pulled back into the bids and we're coming right back up for that double top up to this area. So now we're going to see if there's like a double top rejection to come down. But if you're selling into strength. You got to be careful. Okay, if you grab 10, 20, 30 pips in a pullback, that's good. Counter trading, counter scalping, you get in and out because it could come right back up because there's a pool of bids waiting. Okay, so with DAX, we opened nice, strong, bullish, ignited candle, just as if it was any other time frame. Like if this was a 5-minute candle, it's a bullish bottom. It's ignited. They gapped it down. Here was the close of the previous day. They gapped it down, picked up some liquidity down here, and they came all the way up. So this is our high, 15,912. Let's place a purple line up there. Now we're getting a little bit rejected up there and we're coming down. So other critical levels in the market, we have these big gaps now, these gap candles. So what we got to do is kind of look at other bodies to the left of the chart. Here was a body, here was a body, here's a body, kind of half of this gap in the market. Let's place a yellow line. And then we may come back and transact at this yellow line. If we can continue coming up to our high of the day and we break out, maybe we come up to the top here, 15,950, 955. It's kind of the top of these bodies right up here. And then all of those wicks up there, okay? But it's a lower high and we're pushing down. So we still have this big bullish body. But if we come back down and we start to lose this body, this is where we had the gap in the market. So here was the close yesterday, then they gapped it down. So maybe we come back down to here, and then if we can't hold there, it will come down to where we opened, this bullish ignited candle, and if we lose that, then the market is going to start to break down to here, 15,800, and then it may continue going down bearish down into these levels. Here you've got a body, a wick, a body, wick, and then the last thing that can maybe hold it up is like right over here. Okay, so that's daily analysis on DAX. Today we got a nice big bullish candle. It's still kind of respected 50% of this big bullish candle on NFP Friday that started everything. The volume is still above 50%. Yes, there was yesterday's, could have been a liquidity grab to the low and came back up, but critical volume is right here. So we are currently like right at 50% of this big bullish body. It could still come up. Okay, so let's go to the 1 hour now. Now we could be getting that double top up here. Look at the hourly candle right now on DAX. Okay, look at the range. Okay, it's an unbelievable range, and it opened, it came up, made that high, came back down, and we're right here with the volume. So you can see London was very volatile compared to all of the other hourly candles. So we do have some hourly resistance right over here. Okay, so I'm looking at this white line now where I'm placing it, and look at how it's lining up with a few things to the left. Okay, so this was our previous pre-London high. It's lining up with this wick over here. Yesterday, 8 a.m. It's lining up with that wick right there, with a few bodies over here. So this is a critical hourly level, 15,890. And if we can kind of break the daily high, where's our next kind of hourly resistance? Right in here. So I always place white lines on my chart at any critical hourly levels. So if my 5 minutes are getting there, I can watch. If we draw an hourly trend line from the base of this body, like right here, continue to come up, hugging the bodies, we're still in an hourly uptrend, hugging the bodies. Right here, the body came up, the body came up. This was an impulse break, could have been a liquidity grab, and if this volume kind of closes back in here, we're still above the hourly trend line, which is still considered bullish. Yes, we broke this structure right here, but all of these other levels are all higher lows, higher lows, higher lows. So it is still building. We broke out for the higher high. So we could continue with momentum, but I'd like to see in the next few hours, can we get bullish volume closing above this hourly resistance right here. Okay, so we have a spin top candle that's going to close in 16 minutes on the hourly. There's a lot of indecision on where DAX is going to go. And you can see here where we push down, we're coming right back up. Okay, so that's sellers are pushing it down, buyers are bringing it back up. This is the type of area I want to watch. See here where we broke, no volume closed above that hourly resistance area. So that's what I'm looking for. If some volume can close above here, then maybe we can push up again and fill to the high and possibly break out to the next hourly resistance. Currently in the market, this is a very, very tight area. Like look at how long we've been kind of trading inside here. We had just that impulse break above us and kind of like that impulse break below us. And then the volume is right back right in here. So that's why that hourly candle is that spin top with all of that indecision in the market. Okay, so here I'm just going to show you that there is some resistance here that we want to close above. If you're a conservative trader, okay, you could extend this box. Sorry, not that daily level, but you can extend this down to here if you like. If you're more of a conservative trader, you can go here too. If you're more of an aggressive style trader and you want to watch this volume accumulate before the next move, or you could get a little bit more aggressive and you can kind of place it at the daily if you like. And if volume closes below here and pushes down, we could look for more of an aggressive scalp down into here. Okay, so like below here. And then maybe we can push, break that low and take out that daily down to our low of the day. Okay, so that's what we'll look for DAX. Okay, we're going to place it right over here next to US 30. Okay, so US 30, now we're consolidating right in here. That's why sometimes if you sell, guys, you got to be careful selling with strength until some real structure breaks down. So what could happen is we could flag now at this hourly support and that 5-minute resistance above us. And if it starts to break down, like this is where we can start to sell, like down here if you like. Or we can wait for the official break of that entire structure down there. Okay, we see that now lots of offers are coming in the market, continuing to populate. So maybe we are going to push the market down, down into here. So again, if you'd like to take the trade to sell, what we're looking for down here is a break, a close. Because here it broke, but the wick brought it right back up. So that could happen again. It could break, and if you get in, could get a wick and go right back up. So we want volume to close, red volume to close below here. Maybe retest this area, and then if it gets rejected, then we might have enough momentum to push down into here. And when it gets down here, it could possibly bounce and come right back up. But if it pushes with more momentum, maybe it breaks down here, retest this, and this will turn into the new offers in the market, then push all the way back down to here. Okay, so we'll continue to watch that, guys. Hopefully you can watch this too as well. Okay, so now we're pushing down. We're starting to identify a little bit of resistance in the market, like below that 5-minute level, like right here. Okay, so you see how it's breaking now. So we're breaking that level once again. Okay, so also watch DAX, guys, too. Okay, so this body is going to close in 2 minutes. Yep, it's dropping right through. We broke that low. Okay, so when it comes down, it can possibly come down and pick up bids and come right back up with a wick. But what we're trying to look for is that volume to close below this critical level in the next 1 minute and 50 seconds. If you're in a sell, like this is where sometimes you get rewarded with the big bearish candle because you guys are already in a sell. Mohammed, you took that sell 21 pips. Yeah, there's nothing wrong with that, but just be careful, guys. Okay, as long as you guys know what can happen and you guys know that it can come down and catch a wick, but you're taking, just as long as you guys know, because there's a lot of traders I see that don't understand. When they just see a red candle, they just sell, but they have no idea that it could come down into bids. Okay, so as long as you know what could happen, then it makes trading easier. So when it goes down red for about 20-30 pips, maybe you understand that it can come up on you, but that's why we're looking for more volume to close below here, because with more volume closing below than above us, we're going to get more offers coming in the market, and that will continue maybe to push the market down. But this is one leg up, one leg down, so we're going to figure out where we're going to make this neckline, and then it might come up again, and with more offers pushing down, then we come down with double the volume. Then if we break this bigger neckline area, that's where the market can really drop. Okay, so we'll stay with this for the next 30 seconds, and then I'm going to move over and we're going to look at gold and oil, everyone, okay? Rico, welcome. Thanks for joining. Welcome to SST. Okay, so you see how we came down red? It came down nicely, guys, but look at the wick. It came right back up. Did we close below there? Not yet. So maybe we're going to catch another wick, and it might come up again. But this candle might push down again through here. Okay, so we caught some bids and it's turning green. So this is what I'm saying. Maybe now we're finding our neckline at this hourly white line. Maybe it's going to find some support here, might come up again a little bit, but if it's kind of a lower high shoulder, then maybe they'll continue to push it down, and then it's starting to shape up like that M pattern. Does it surprise me that it's going up? No. Okay, it came up, it came back down, it broke a new low, but did it close down there? No. So they brought it right back up to the hourly, and it's turning a green candle. So it might come up, maybe here, maybe up to there, maybe like into that box, and if it pushes down, then we do the M pattern. So right now it got rejected. That's good. So if it continues to get rejected, it may push down and push down through here. But we need that nice confirmation too of volume closing below. You can go to a lower time frame too. You can check the 1 minute candles and watch what's happening here too. Like you can go to your ones and you can be watching the 1 minute candles if they close below here. See the 1 minute candles? They're doing their double top. They came down. That candle broke. 1 minute candles came right back up. So this one pushing down, it's going to close in 25 seconds. If this 1 minute candle kind of closes below here, next one retests, you could look for a sell opportunity too. So you don't have to sit on 5 minute candles. You can scalp 1 minute candles and look too for entries on ones as well. And then when you get in, you're riding the 5 minute volume. That's sometimes when I'm trading 5 minute candles and I get in a trade, I'm watching my upper 15 minute candle. Like yesterday, when we got into that one trade for 80 pips, we got in on the 5, but then we watched the 15 minute volume push it all the way down. No, Benny, I'm not focusing on US 30 and DAX today. I'm sorry, but we're going to do all of our charts. But sometimes when something is happening, I like explaining something because I see some people are selling and things like that. No, I'm going to do gold, oil, and GBP USD. But Benny, there's like we got to take our time with things, okay? We cannot just rush everything. That's the problem with multi-charting, guys, okay? Everyone is just waiting for something else, but when we do this, we're possibly going to miss some setups, okay? I just want to make that clear for everybody, because I don't flip-flop charts when I normally trade by myself. I stay with one thing and I watch. But we're going to now, like, I wanted to explain what's going on here, but we're going to look at gold and oil now. So that's why, guys, if you guys are trading, you guys need to manage your accounts, okay? Because I'm going to move over. I'm going to be doing some other things now. Okay, so please, guys, if you can watch, it's developing its neckline here. Could drop a little further down. It could pull back into here and continue dropping. So for buys, maybe we'll look for something later on above this area for the new high. Might consolidate in here. For sells, possibly below here, unless you're already in a sell. DAX is trying to break here a couple times. Did any 5 minute volume close below? Not yet. So it's still in the consolidating box. Okay, guys, so I see you guys do not stop with gold. I know you guys love gold. Holy. So let's go to gold, guys. And if you guys get caught on Friday on gold, Uncle Ronnie told you to be careful with gold on a Friday. Okay, so just looking at gold right now on the 5 minutes, I can see right now 2012, 2013 is showing resistance in the market. We have not broke above here. We just had that impulse break at 325 and coming right back down. We have a lot of base support right here at 2008, 2009 with that impulse break down to 2005 and coming right back up. Okay, so we can definitely just get in a candle and start trading right now. Absolutely, anybody can. But that's not the way how I conduct business. I start off with the daily. If I haven't been trading gold for the last couple of days, let's say, I have no idea where it's been, where it could go. So that's why a little fast top down can help you out here, okay? So I'm sure if you guys are all the gold traders, like you guys are always interested about gold, I'm sure you guys know that it came up to 2066. I hope you guys are doing more than just a top-down analysis. I hope you guys know the all-time highs are up here, okay? So make sure you guys know 2079, 2075. This is all-time high. We actually shorted this candle live. This is all-time high. Okay, so bring these across. so you know where your all-time highs are. Okay, so on the dailies now, what happened over here? Tuesday, May 2nd, big bullish day, higher high, higher low, higher high, spike right into there, came down and pushed down. And then we're coming back up to these levels. This is a big level too. Psychological 2050, right here. What's happening when we're getting up to 2050? Sorry, let me just place this as a yellow. It is a big daily resistance. We got rejected kind of 2 times up here. There's the body. We came up again Wednesday this week and got rejected up there. Yesterday we came up to 2041, lower than here. They pushed it down. We kind of closed below the structure. Today gold pulled up to 2018 and now we're breaking down low. Okay, so this is an M pattern. Okay, what we were just talking about. Came up, back down. Here's our neckline. It came up again, lower high, push down. Now we're below the neckline, so we might see gold maybe drop down to 2000. That's our next level. And then if we can't hold 2000, 1990 and 1980 down here. Okay. What's that, Goblin? I like a lot of traders playing along the saying Friday is a boogeyman gonna take you traders into the woods. No, it's not. But most retail traders lose their money because not because of the markets, just because of the Friday. They rush a lot of trades because it's the weekend and they want to make some money for the weekend, and they end up losing. That's just facts. Okay, it's not a myth. But sometimes Fridays provide the best volume to trade. But retail traders who are unaware of risk management tend to lose all their money on a Friday. Those are just facts. It's not about being a myth in the market. But everybody trades. Look at your journal. Find out the days where you're very successful as a trader and find out the days where you have bad days. And typically Mondays and Fridays are the days where most retail traders have difficulty in the markets. Those are facts. That's not a myth. But everybody trades different. You know, some traders say that Fridays are the best days trading. Okay, so gold, our high of the day, 2017, 2018. What is our low of the day? Okay, everyone is just asking about the buffer. Like this is why YouTube is so difficult, guys. It's not my internet. My internet is probably a lot faster than your internet. So if you are having buffering issues, it's probably on your side. If your quality is bad, it's probably your quality. I have crystal clear quality over here. A lot of traders, maybe it's on your end, okay? You got to look at your system. Okay, so this is the thing. I lose track, guys. Okay. Let's go back to analysis, please. Okay, so our high of the day on gold is 2018. Our low of the day is 2005. Okay? What happened today? We opened green, we came up. Have we touched 50% of the volume here? No. So what can we do? We can draw maybe our first area of resistance from this wick down to here. Okay, red box on the daily to let us know. This is just for reference. Okay, I'm not saying that this is going to be a supply box. This is reference that if we do come up here, we still have a lot of volume below us. So the market could still push down. We came down. We broke yesterday's low and we're coming down with a new low down here. When we came down 2005, cut a wick, came back up. So if we do come down back with volume and we break here, then we have maybe 2000. Psychological 2000 area. Right here. Yes, it's 1999.70, but I'm going to say 2000 level. Give or take. Okay, and if we lose the 2000, we're possibly going to push down to 1995, 94 area. Why? Because structure tells me why. Here we've got two bodies. Here we've got a body, a body, a body, a body. Okay, so if we were barcoding on the daily at this area is telling us a lot of what's happening at 1995. If it continues to push down, 1990. Right over here. Okay, so that's good enough. We're at right here. Okay, so we've done enough analysis to the downside. We are pushing down with volume. Let's go to the 1 hour now. Okay, so the 1 hour. We broke here yesterday, 9 a.m. Wall Street. The pullbacks came up. Didn't do much over here. We came to previous levels. And then we started barcoding. Green, red. This is when in the afternoon we were trading and gold wasn't moving. Nothing. Okay, it was dead. It was a slug. That's why we look at US 30 and NASDAQ in the afternoon. We don't focus on gold too much because it doesn't move. And now with the Asian market, where has it moved? It came back up here again and got rejected. We have a big red candle right here, push down. We continue now going into London, pre-London. We push down and now we're trading here. So our hourly candles, what are we doing? We're finding a little bit of hourly resistance, maybe right here. Let's place a white line. And we're kind of consolidating between hourly support and daily resistance up here. So now if I draw like an hourly area, I can see right here. We're still below 50% of this big bearish candle. It came up multiple times up to 2013 and got rejected. So if we do push up back above here, 2000, then we can maybe push to 2017. But if we can close below here, maybe we're going to take out the low of the day and continue dropping. Okay, the hourly, is there a trend line? Yes, there is. This is a lower high. This is a lower high. So on top of us, we are pushing down. Every pullback is coming into here, lower high, push down. Pullback is coming to the trend line, continuing to push down. Okay, so let's go to the 5 minutes. My name is Ron. My name is not Dom. Dom is a depth of market. This is the Dom. D-O-M. Depth of market. My name is Ron, guys. But yeah, don't get me confused with the depth of market. This is the depth of market over here. Okay, so you guys see your gold. What's happening when we get into this red area, this red box? Look how it trades. Garbage. Comes in here, push down. Comes in again, push down. Comes in again, push down. Came in again, push down. Okay, so now we start to see a pattern in here. Okay, so now scalping. Big red candle came here at 345. If I just look at 50% of it, maybe like right here, we might get a pullback up to here. Okay, so if you're scalping, you want to kind of stay below here if you're short selling, to keep that momentum continue to come down. But what I would be looking for maybe a bigger position, like going into New York, is let's see if we can break 2012-13, break that hourly trend line, and look for a potential buy above here for New York. Because around 7, 8, 9 a.m., that's the time in sales where you should be looking to trade gold. You might get better opportunities, so it's nice to locate your levels. If this thing continues to push down, I would look for maybe a potential sell if gold can close below 2008, below this hourly support level, because what could happen is you might have enough momentum to come back down to the daily low, and then when it gets down here, you have to keep in mind that it could bounce here and go back up. But as a scalp, from here to there, it's roughly 20 to 25 pips. But if it breaks down here and then it continues with that momentum and you break that low on the daily, then it could shoot down to that 2000 level that we're looking for that daily low. But right now, this is where it's possibly going to consolidate now. It's going to trade sideways under 50% of this base of that big red candle to this hourly support. We're seeing it's already getting rejected there. So this is where now it might trade like sideways inside here and accumulate again. And if you want to be more like an aggressive scalper, like above here too, you could look to take that buy above here, but you got to understand that it could come right into this red box, and every time it comes in here, it's getting pushed down, unless it can come with more momentum. But if I'm measuring that move and I'm taking that buy on gold from here to there, that's about 10 pips. There's 15 in there. The top is 20 to 25 up to the trend line. Okay, so if you're trading gold, maybe if it's making a higher low right here and it's coming right back up, you could look for that. If you're more of a conservative trader, then you got to wait up there. This is more if you're aggressive. So you ask yourself, are you an aggressive trader or are you more of a conservative trader? If that's the case, that's what you got to do. You got to wait. Okay, so that's gold, guys. I'm not a big fan of trading gold in London. I'm just being honest with you guys. Not a big fan of trading gold post New York like yesterday afternoon. I'm just being honest with you guys. Gold is more 7, 8, 9, 10 a.m. Has better moves. But there's always everything to catch 24 hours out of the day. Let's do oil now. Let's move over. No, it's all good. 200 people watching, only 78 likes. I gauge, I judge, and then I'll just stick in the zooms. I do this all to gauge interest. If there's no interest, it's all good. Okay, let's do oil. Okay, what's going on over here with US 30? Is anybody watching it? Or are we just focusing over here on gold? Okay, so it came down. Okay, so see how it came right down to the base of that demand area. So if you were in sells, okay, it's a nice sell. There's nothing wrong with that. That's a beautiful, beautiful counter sell, and it came right into this demand zone. So are we surprised? That's got a big bullish candle coming all the way back up here. I'm not surprised. Okay, so this is now we see it came up leg 1, leg 2, neckline. We could be coming up, back up again. If it comes back down, then that's the neckline break. That's where I'm looking for that sell position back down in here. Okay. And DAX, did it close below here? Do we see any candle that closed below here? No. So these were all impulse candles. If you sold this candle, or this candle, then you sold on impulse. And now you're in drawdown on this big body. Okay? So I don't know how to make that any clearer to anybody. If you're taking an impulse candle, this is what can happen. Okay, so let's take a look at oil. So I don't need to always go over this, guys. I hope you guys, all oil traders, should be aware of what's going on here. Okay, so Friday, March 31st, it was this bullish uptrend coming back up. We closed here on a Friday. There was OPEC news over the weekend where they cut production. That's why we opened up all the way up to $81, $82 a barrel. It traded here for a week. This is the gap in the market. We made that high up to $83.84. That is monthly supply up here. And then it pushed all the way back down. Halfway in the gap, pulled back, lower high, pushed down, closed below, filled that entire gap. We pulled back with a lower high. We pushed real hard on Tuesday, May 2nd, closed below almost all structure, 50% of this candle, and continued to drop where it liquidated all the way down to $63 and took out the low. And then it came back up. We were right here again Friday. See how oil trades on Friday and weekends. You have to, oh yes, look at US 30, guys. Okay, see, this is what this is what I like to follow, guys. Like this, these moves, like buying over here, buying this, by looking what's going on here. So now it's testing up here, guys. It could break through here. It could also get that double top and come right back down. DAX is really bullish, holding above here. So if it can hold this green box, it could continue to drive up, but you're also looking for volume to close above here too. Okay, this is why I love trading indices, because you can get up at 3 in the morning and catch a green candle like this, and that's 25 with a continuation of 35 pips, and you can go right back to sleep. Wes, you're with me. I know you are. Wes Night Owl, I know you are. 3 of 3 trades, US 30, 35 pips on this trade. Good for you, bro. Yeah, you caught that candle. Me and Wes are on the same page. He's a night owl. He's like me. Get up at nighttime, do all your work at night, and then go on with your day. And then most traders are just focusing on like gold, where it's going nowhere right now in London. Okay, so there's securities for specific times, guys. Okay, so this is what I was talking about. Oil. How on Friday, look at how it closes. So like if you're in a short position on Fridays and then it gaps up all the way for $74 a barrel, you're in big trouble. So unless you're going long on oil on weekends, okay, if you're swinging. So make sure you understand what can the implications of holding trades on Fridays going into the weekends, okay? Especially with something like oil that could be affected with news over the weekend, the wars starting, gold and things like that. Guys, are you aware in Pakistan right now? I have friends in Pakistan. I just found out like the other day that they have absolutely no internet in their entire country right now. It's shut down. They have zero internet. I can't get a hold of him anymore. Like they captured Imran Khan over there. It's like they have 3 days now, absolutely no internet in that country. Yeah, it's crazy times, guys, we are living in. Okay, so news can happen any time of the day, and anything can happen. So you have to be well aware when you're trading financial markets and you got your money in these markets. Anything can happen overnight. There could be a war that starts tomorrow, and everything will be affected. Okay, so oil. We have our it's pushing down this week. Wednesday, midweek reversal. This is what's called. If you follow moves on like weekly, normally Monday, Tuesday get things started. Wednesday is called a midweek reversal or a midweek continuation for a reason, because it's kind of like hump day in the middle of the week where it makes either a continuation move or a reversal move. It's not always like that, but that's a given power pattern. If you're a if you're a swing trader, you should be focusing on that, because this week there's Tuesday, Wednesday, then we started the midweek reversal. So it came down Thursday and Friday. Here's our candle. So again, if this was a 5-minute setup, we should be focusing on 50% of this bullish candle right here at $70, because that should be a focal point. We're coming down into it, and we'll see what happens down here. Are we going to pick up a wick in here? So that's our daily high, $71.40. What is our daily low? We're right there right now, $70.25. Okay, and if we break here, where could we push down to? We could push down to maybe this wick right here, $69.80. Okay, and remember, I'm finding levels for scalping. If you're a swing trader, you're probably laughing at me. You're probably saying, well, Ron, why are you looking right there? If I'm in a swing position, I'm looking to take out the lows down here. That's perfectly fine. If you're a swing trader, you should be, I'm telling you, you should be looking for bigger areas. But I'm not a swing trader, and most of us are not swinging right now in London. We're looking to take some potential scalps, and then from here to there, that's a big zone. If you get your ruler, because if it breaks 50% of there and comes down to there, that's about 50 pips. That's great for a scalper. I know you guys are looking for 300, 500 pip moves, but then what you need to focus on is maybe a move coming down to right over here. This is a critical area for you. $68.50. Find out what happens down there, because here's the base of the candles where it picked up all that liquidity and it's holding right here. So that's kind of like where you could have some demand still holding. This to me looks like a massive liquidity grab to the low, but you still gotta target that. And then there's huge imbalance in here. But here we have more information. $67.01 right there. You can cut 67 flat, easy. Okay, if it breaks here, you can come down there. If it continues breaks, $66 and like a quarter right over here. Continue break, I can get that wick, 65 and a quarter. So we could do this all day together. Okay, if you want to get all your specific levels, that's where it could go. Also, okay, what happens if we catch maybe a wick or a little bit of a dip down here at 50% of this bullish candle, it still holds, and we move up? Then maybe we come up to $70.70 or 75 cents right back up here. We can fill back up to here, maybe get a reaction here. And then if we don't have any other information, what I do is I just cut that in half right there, $71.05. But if I want to look to the left of the chart and get more data, I can. I can look for specific candle wicks and everything in there. Okay, so what I would do is just cut it in half. If you don't know, cut it in half. If you're close to a psychological level, you're good. Now we have a big bearish candle coming down, testing half of this. So let's go to the 1 hour, find out what's going on the 1 hour. Okay, so overall we are pushing down bearish. Lower lows, lower highs, lower lows. Look at the rejection wick the last hour on oil. Okay, so London came all the way up. There's London's high below this daily area, got rejected, closed as an inverted hammer. We opened, came back, tested these lows coming up, and here's the volume. Okay, so hourly, we have a little bit of hourly support holding here. We have some hourly resistance like below here, 50% of this move. Okay, red and green, those are our areas. Now the 5-minute volume is just trading inside here right now. What we got to do is go to the 5 minutes. Okay, now double bottom. Okay, so we came down, now we located that hourly support box right below the daily low, purple line. It came back up, it pushed all the way back down, double bottom. But now we're kind of barcoding in here. Okay, red, green, red. Okay, so if you want to kind of trap this area inside here, you can. And if it comes back and maybe closes above here, we can maybe get into a buy to take it back up to this daily yellow line and maybe a little bit of an impulse break and take out these highs again. Right now, it's not looking good for a buy. Right now, it pulled up green, got rejected at about half of this candle, and now it's pushing down as a shooting star. Okay, so if oil breaks, this is an impulse candle breaking this big hourly demand box and the daily low, the purple line. So it could break, catch a wick, and come right back up. It could break and close below and retest this and continue selling. So you have to be ready. Also buys on oil. Maybe if it comes back above here at some point today, that we could look for a potential buy above there. Okay, right now it is selling bearish currently. Okay, I'm still watching US 30 over here, guys. So came down, still building, looking to come back up to this 33,500 level. It's still building over here. Okay, so we will leave oil right over here. See the impulse, so it came down, coming right back up. How much time is left on it? 15 seconds. So it looks like it's an impulse break. Where's the volume closing? Might close again above here. Might open green and come back up. Might close below here. Might be red, getting ready to drop. Okay, so open green, coming right back up. So that's a false break below there. Did volume close below? I don't see any. So if you entered, it was an impulse entry on your part. If you just waited patiently and waited for that volume to close, it closed in the green box and it's ignited coming right back up. So there's no sell. Some traders, their difficulty is just waiting for a body to close. That's their biggest struggle. Just force yourself to wait for candles to close if you have no idea. Like here too, gold, it broke that hourly, came back up. Broke the hourly and came back and closed there. Those were impulse breaks that there was no trade if you waited. Okay guys, so we've done gold and oil. Let's take a look again. So DAX closed above and is bullish right now. Okay, so we're going to see if DAX can continue to hold this level, maybe fill these prior wicks, London, okay, those big London wicks, and then continue to take out the high, and we move bullish. US 30, guys, okay, so that was a nice push up. Some of you guys took that sell. That was good. You guys took it. But hopefully you guys cashed out down there. Okay, you guys took some profit down into this demand area. We came back up with a nice big bullish body candle right back into the consolidated area. So we're trading right back inside here. So we can still continue to look for maybe those potential buys if we close above here. This could be an official double top too. Okay, so let's keep that in mind. Coming up here, there's our official neckline. We're coming up again. If it gets rejected here too, it may push down and be the actual double top M and break down and come down here. That is one possibility of a future pattern. Some traders will now, maybe if it is like a double top, maybe start to look for maybe a possible short opportunity below here. And if you measure the move, so you know what you could expect from there back down to the green box, it's about 20 pips. Okay, then if it really breaks the neckline, could shoot down into here for about 40, 50. Okay, that's again, if you're an aggressive trader and you're looking to take that second leg down, breaking right here, you could get that juice in there. If not, you gotta continue to wait for the bigger move right here. Yeah, this is an ignited candle on James on US 30, so it's ignited. So let's see if it has momentum to take out all these highs. If we can take out these, we might have a bullish impulse break out of here. And then you see here on the Bookmap, okay, so the bids are lining up. They're getting ready to transact up here. So this area, 33,500, we got 26 offers waiting to get transacted. Hopefully buyers can take these out and push it through here, and then we can start to populate 33,500 with green bids in there and flip the book, and then continue to drive up this depth of market and really fill that imbalance. But you still have to respect this area too. Okay guys, so in just a few moments, we can wait. We'll watch this for a couple minutes, and then we're going to do GBP USD, guys. Okay. Yep, DAX has a nice setup here as well. So we're closing above, nice retest of this area. DAX can continue, maybe possibly to fill up these wicks. And again, so you know exactly how like big of a move it is. If it fills those wicks, look about 15, 16. If it breaks that daily high, maybe 20 plus pips. Yeah, US 30 looks great. There's the pop. There it is. There it goes, guys. Yes. Okay, so that's that ignited bar breaking the high. There goes DAX too. Okay, so you see, guys, we took out 500, 33,500. See how we populate? There we go. Yes, we hit this one too, guys. Okay, this is a solid buy. Like, there's no questions. Volume closed above. The retest is beautiful, and it followed what US 30 was doing for the break. So that's sometimes what scalpers look for. It's that move right there. And then now you see we populated 33,500 now with bids. So there's going to be a pullback wick, but now when it pulls back, we're pulling back into bids, and this can drive it up a little further. Now we got another ignited bar, but now it's possibly going to come down to retest the breaking entry point right here. If it can hold and stack these bids, then we can possibly take out that high and go move up to that daily yellow line. We might need to also consolidate here. This is a big zone that we just broke. This is London's high. But here's the pullback, okay? So there's always going to be pullbacks in trading. Doesn't matter what type of candlesticks you trade. Doesn't matter what time frame. There's always going to be pullbacks. But pullbacks can be healthy, okay? A lot of traders get scared of pullbacks and they panic. As soon as they see a red candle, they panic. Okay? If you're panicking when you see a red candle and you're in a buy, maybe it's because you took a trade at not the best time. Maybe like you bought the extreme high in a supply zone, then I understand. But if you're following like a trend of the market, like if you're following this entire trend from London, we're making higher highs, red candles, 1, 2, 3, 4, 5 of them, but they came into a higher low and then it continued to make a new higher high. So we've extended the uptrend. In order to extend uptrends, we have to make higher highs and higher lows. So the higher lows can be healthy as long as they're respected at these areas of demand. And that's why this depth of market is important, because when we have pullbacks, red candles, if we have bids below us stacking, then they will absorb the liquidity and then we can potentially come back for a new higher high move. Noor, how can I tell if it's a healthy pullback? If it's pulling back into a demand pool of bids, but also just following this. Like, see how we broke out here? The pullback, remember this was a neckline right here. Like this was resistance. We got rejected, rejected, rejected. Okay, but then we closed above and then extended the uptrend, Noor. And then when we pulled back, look at where we pulled back. I just flipped this box green. It used to be red and green now. And it pulled back perfectly right in here. Met with big bids. There's our big bullish engulfing candle, and then it continued to break and we broke through here. That was that little impulse break for that new high, and now we're getting rejected. Well, we're retesting the breakout point. So if we come back down and we still hold this, it's still healthy. It can now become a bigger level, but also maybe right here now, if any pullbacks come into here, maybe if we can hold this level, like if it pulls back into here and this area doesn't break, we'll pick up more bids possibly and continue to maybe push for some highs. But if we can hold this area without even coming down here, maybe we're going to populate the bids right now. This is why this is a battle zone, this 33,500. So this is what they're fighting for right here. This is a critical level. It used to be that big resistance in the market, but now you can see that the bids are coming in, but now it's transactions are fighting. There's a lot of transactions that are occurring right here in the market at this point in time, because this is a big pivot level, guys. Okay, so as long as like we can get the bids coming in, normally when we're watching New York, there's massive bids in here. You'll see like 50 or 60 or 70. This is London's volume. London is not as busy as New York, so you can see the book is kind of balanced right here. But in New York, you really see a huge footprint. You really see like they're leaving their mark. DAX is beautiful, guys, okay? There's no question about DAX. DAX is excellent, okay? The volume closed above, right here. This candle closed above. There's the pullback. If you buy, place your stop loss like right below here. And you're in profit, guys, okay? Let's see if it can really come up and tap that daily high, that purple line. Like right up here. Okay, and what is US 30 doing? It came right back to this demand area, has a nice wick holding. So let's see now if it can continue maybe to turn into a nice little push to take that high out and approach this daily 33,460 area. Beautiful. Okay, so see here how we pulled back right at that yellow line. Who's in control of 33,500? It looks like the bidders are taking it. Now we're going to possibly take out the high, and we're going to come transact up here. And you and I, we're going to get some pips and some pancakes here if we can break out. So that's a healthy pullback. We didn't really break any structure down. So as soon as we can pop here, transact up here, it's kind of what scalpers are looking for, that nice little pop. DAX is making it, okay? So DAX is getting up there. Guys, that's a nice move on DAX. If you kind of brought the retest candle, DAX is right up there for approximately 15 to 20 pips. That's a nice little pop we're getting on US 30. Let's see if we can build with this. It's a nice ignited continuation candle, but we're just testing that high. How do I manage my trades? What do you mean, how do I manage them? I'm kind of showing you exactly how I manage my trades and how I trade. What do you want me to tell you? How do I manage my trades? There we go. Like, this is how I manage my trade. I'm walking you through my analysis. I'm walking you through my psychology right now. What do you mean, how do I manage it? I manage my trades much different than other people. I pip and dip. That's not a normal style for other people. I don't want to push that on anybody. You got to figure out your own style of trading. I'm telling you that filled a zone right there. If you're on DAX, it filled up. That's a zone fill. Now, what we're looking for is the break of the daily high. Like, if you understand why my purple line is here, this is that daily candle that's trying to break the daily high. There's going to be some resistance here. So when it comes up there to that purple line, my style is I'm dipping out of the market. It did what I wanted it to do. It came to that purple line exactly. That's a 15-20 pip haul. If you want to continue to hold, now what we just talked about for the last 10 minutes is pullbacks. Is the pullback going to be a healthy pullback, or is it going to be a break of structure? That's the thing, okay? If you guys don't understand like this type of analysis, some live traders come on YouTube and they just talk. They'll backtest and they'll just talk to you. They're not telling you where they're buying and selling and telling you because they're scared to. I'm telling you the truth. They're scared of being wrong. Okay, a lot of traders don't like to be wrong in front of a big audience because they can't deal with it. I don't give a shit, to tell you the truth. I've been wrong before and I don't care. That's trading. I'll tell you guys. If I get stopped out, I tell you guys. I tell you guys exactly every time I take a trade. I don't care. I'm not here to impress anybody. I'm here to just educate and show you guys where I'm taking trades, how I'm walking through the market. But some traders don't do what we do. So if that analysis hasn't helped you in this entire London session, I don't know what else will. Okay, so it's still holding a strong, US 30 still has a strong candle. What did DAX do? It came, it tapped the daily purple line. So for DAX, this is DAX's daily high. This is just a normal daily critical area with this yellow line on US 30. Okay, so let me just show you real quick what DAX did on the daily so you guys understand this. If you go back to your daily candle, this daily high level, okay, we came, we tapped it, we came back down, we picked up liquidity, we came back up, and we tapped it again. It got rejected. So if we continue to build this daily candle today, and it comes back up here at this daily high, we're going to break out to maybe that hourly level up there. So it's still building. Okay, on the 5 minutes, this is when we tapped. London market open, 3 a.m. See that 3 a.m. candle? When it came up there, that's what created the daily high. Then we got pushed down. It came up again. Lower high got pushed down. Then it came all the way down to 330, we consolidated it going into 4 a.m. We came all the way right back up. We closed above. So we filled that imbalance from here back to the daily high. That is you can take a TP up there. Okay. But if you didn't, it's okay. And now it could pull back. So now you got to ask yourself, where could it pull back? Can it hold 50% of this bullish body right here? 15,900. If it cannot hold this body of this candle, unfortunately, it's possibly going to break down back down to where the breakout happened. And that could be where your break even is, or where you entered the market, like over here, below here. Okay, and then if it comes down, it's going to retest this area. We're looking for this area to hold. If it can't, then unfortunately it's going to break down to here. This is where you can scalp down in here. But right now, maybe we form a flag here. Maybe it just trades sideways in here and holds this, picks up more bids, and comes back up to try. So this is a real critical area. That's why it's a purple line. This is not a normal area. This is your daily high. You have to show this area respect. Dow is trying. It's trying, but it's also light volume too in London, but it's still respecting the area. Okay, it's still building. It's a little doji candle. We still haven't really broke any critical structure, but it sucks when we're in buys and then it pulls back. But it's still holding 50% of this green candle, the previous candle right here. So if we can still maintain that, maybe continue to push. You can see how the bids and the offers are just really consolidating right now. They're getting really tight. So there's a lot of transactions happening, but the bids are still accumulating here. Remember 500, now we have 16 bids and 11 in here. We're building a little bit more double digits above us, and they're still building. Like the bids are fighting, guys. Yeah, so that's why look at the shape of the candle. It came perfectly, retested 50%. Now we're trying to take out that high up there. If we can take out this high, have a high probability of tapping that yellow line, and maybe we get that daily push. Look at DAX. Came down, picking up multiple wicks. Did we break down 50% of this candle? No. So if you never took your profit out of there, you're still holding, still came down, picked up more bids. Now it might come up with more momentum and try and break that area. Okay, I'm hoping it does for the sake of all of us here. Hope US 30 and DAX can break out of here, because I know a lot of us are still in buys. Okay guys, thank you. 250 viewers on YouTube for London. If you guys are getting value, hit that like button. If you guys are grabbing a few pips with us, hit that like button. If you guys are learning something new today, hit that like button. Here we go. Okay, we're coming right back up. Nice bids. Okay, beautiful, guys. The bids can be your friend when they cooperate in buys. Kim, no problem. Thank you. I appreciate you. Okay, guys, and also now it's giving you another opportunity too. If you never took out some profit the first time, now it's coming right back up. If you're rethinking it again, it's giving you another opportunity, because I can see some heat coming above us now. In here, it all of a sudden just started populating now. Just got in here, 33,530, red above us, 537. We could pop up there again. Yes, here's the pop, guys. Here's the pop. Okay, get your pips up here. Move your trailing stop loss too if you can. But beautiful. See how the bids are winning? Look at that. Just real nice, guys. We've been destroying this market this week. I gotta be honest. Like, it's been really good reads on the market this week. The volume has all been cooperating through London, through Wall Street, and through Post. It's been really nice this week. I'm not sure if it was after FOMC why we're getting such nice volume trading in the markets, but it's been beautiful lately. Okay, so guys, this is where you can't get greedy. A daily high break, you know, just you guys manage your account, guys. Because this break of here, okay, that's another additional 25 pips you can put in the bank. Okay, for DAX, now what we got to do is kind of flip this zone green. It used to be red. Let's flip it green. Let's go through our motions and see if now this can develop and hold in here. We got another ignited bullish candle on US 30. It's beautiful when we get these ignited candles. Look at, we could tap right into all of these offers. This is beautiful, guys. Wow, ignited candles, guys. This is like, if you're a price action trader, this is really nice when you see bodies like this. Oh, this is like, oh my god. It was worth getting up today for this. Noor, it's worth it this early in the morning for these pips. Look at Wes. Look at you go, bro. 404, 33 pips, total 96 for the night. Man, you killed it, bro. Night Owl striking again. The Leafs are on tonight, Friday night. I hope they can lose tonight and get it over with. I can't stand my neighbors all weekend. Okay, guys, so this is why I like to stay with one security, because this is beautiful, guys. Look at this, okay? Continuing. Now we really, really are pushing these bids. I haven't even looked at RSI because I don't really care about RSI. Like, look at RSI. I guarantee you there's a ton of traders selling because RSI is at 75. And you're selling into bids and you're getting your account hammered right now. Look at like 75, 76 on DAX. If you're selling, you're getting hammered because you're selling into big bids. These bids are just eating these offers. Wow. Excellent, guys. Beautiful. Okay, so this is where now you bring your trailing stop loss up. Okay, be smart, guys. Bring your trailing stop loss up. When you're running 30 plus pips, start bringing your trailing stop loss because we're going into, going to be soon a new 15-minute candle at 4:45 and more importantly an hourly candle coming at 5 a.m. And then that could be a possible pullback, but you don't want to give your majority of your profit away. Okay, for most of us in North America, we're getting up at 1, 2, 3 a.m. in the morning. It's not easy. So when we're going to profit, make sure you're making it worthwhile, because then it would suck getting up this early and then you don't bank anything. Okay, so US 30 is running 32 pips right now from this breakout. Some of you guys were in even earlier. Okay, so I'm just saying from this breakout area. Wes, US 30, will you marry me? No, she's taken, Wes. I'm sorry, bro. I've been with her for a while now. You gotta look for someone else. US 30, Miss Jones is mine. I've been very loyal to her. I've never strayed away. I've never cheated on her. You guys want me to cheat on her with gold. You guys keep getting me. I'm always sharing, guys. There's enough of her to go around, okay? Let's just be, we can all enjoy her. Man, if my wife hears me, you guys are gonna get me in a lot of trouble. She's probably like, who the hell is this guy talking to at 4 in the morning like this? Okay, guys, so I'm gonna move over from US 30. I pipped and dipped myself out of here. If you guys can manage your trade, watch it, guys. I'm gonna move over now, do a little GBP USD analysis. Okay, so please, guys, manage your trades. I will leave Bookmap. You guys are starting to see like the big heat coming in here now. So now the offers are going to come in. It's a new 15-minute candle, like 4:45 coming in the market. So maybe now, see how they pinned it? and they closed it back below that daily area. So maybe now it might come up a little bit and then retrace. But on the retracements, okay, remember what we were saying. Some pullbacks can be healthy pullbacks. If we can come back maybe into here, pick up the bids and continue moving up. Like if you were in, like look at the trend. Like these were buyers right here. So if they held the pullback, they got rewarded on that big move. So if it pulls back again, you still have a lot of momentum below us. Like remember, somebody bought this move on this wick. So coming up here, they're roughly 80 pips in profit. Okay, so if there's like a 20, 30 pip pullback, they're still up 50 pips. I'm sure that they have a trailing stop loss like right here. So if it pulls back, you know, these guys could be still holding the market up and continue to come up. But once we lose this level, then it's going to test here. And once it loses this, then this entire structure that's being built will be coming down to here. So US 30, has it really retraced down? Not yet. Okay, so but if it does, we expect a retracement to come down back down to this level. But this is where you don't get too greedy. Okay, 10, 15, 20, 30 pips scalping in London. Unless you're looking to hold this trade going into like New York, you can absolutely do that. But everybody has their own style. Like look at gold. Okay, see what I mean, guys? Everyone just asked, Ron, go to gold, go check out gold. What is, like, even yesterday, I was asking guys, what was gold doing in the afternoon? Absolutely nothing. You know what I mean? This is headaches. This is frustrating trading this shit. Okay, oil is actually moving a little bit, but like look at what we just ate. Like look at DAX, look at US 30. I'm sure if we looked at Nasdaq probably looks very, very similar to what this is. Okay, you guys can do really, really well trading indices. Zero commissions. How about that too? Trading this garbage with gold, you got to pay commissions. I have pretty good commissions too with gold. $4.50 two-way street, 225 a buy, 225 a close, 450. Some of you guys trading gold are $7 a commission a standard lot. Like that's a lot. Taken away from your profits when you can trade a beautiful moving indice with zero commissions and low spreads. Think about it. Think about it over the weekend, guys. Go over your journaling. See how well you're doing with gold and look at maybe look at US 30, guys. Okay, so let's take a look at GBP USD. Let's get our FX fix for the day. Okay, so GBP USD, it's moving as well. So 2 a.m. we had all that news. Okay, so the pound came all the way back up. We made a double top up here. Going into 4 a.m. we pushed all the way back down. So it pulled back. Did it touch the low down here at 2 a.m.? No. So it's a higher low. So the bids came back in, brought it up. Did we break for a new higher high? Not yet. So now it's pulling right back down. Okay, so let's go to the daily. I haven't traded GBP USD in a while. So for myself, I have no idea where it is. So I'm going to conduct a daily top down. Okay, so let's see how it's been moving. Overall, we are in a daily uptrend, weekly uptrend. It's making higher highs, higher lows, higher highs, higher lows, higher highs. And this could be another higher low, but yesterday was a big bearish candle. Okay, and it's with all of these indecision low volume candles up here. It came into possibly a higher time frame area of supply. We got a lot of indecision. Then when there's indecision, a supplier can sense weakness and say, okay, I see that there's weakness in the buyers, thin volume. I'll come in with a lot of supply and just drop it down. Okay, that's how markets work. Sense weakness. But when you look to the left of the chart, I'm sure some of you guys did this on your top-down analysis. This area sticks out like a sore thumb right over here. That was a previous high back in June of 2022. If you bring this block, zone, rectangle, box, whatever you want to call this thing, you know, it's got a million different words, you bring it across. And at some point in time, maybe the volume will come and transact in here. And if you made it red to show you that it would have been resistance or supply. What happened when we came in here? It came in, got rejected. It came in, got rejected. It broke down. It came in again, got rejected. This is where we had a lot of the indecision. And then now, when a supplier sees that, they can load up some offers and drop the market down. Where did we come down to? 50% of this big bullish candle on last Wednesday. Okay, so we can see now how we're trading. So we pulled right back into 50% of this bullish candle. We're going to see if we can come up. Or can we come up 50% of this red candle now? So you always, and it's located at critical areas in the market. So when I say these 50% levels, I'm not like just saying this, but that's where volume is gravitated to where it wants to go. You can literally see critical areas at half of each one of these candles. So here's our daily high today, 125.41. If it pushes up a little higher, where's like our next critical area? Right here. There's a body, kind of a wick and rejected there. Draw a yellow line, eyeball it. It's roughly 50% of this bearish candle right there. Okay, so what I would do on the daily is automatically locate this area with like a red box, a little bit above, a little bit below. And if it breaks above here, then we could come up where? To maybe these two wicks, a wick and a wick. And then our top of our zone up there, the red zone. Okay, so I can see US 30 is getting pulled back in that big heat of offers that just came in. Now they're pushing it back down to maybe test here. Remember that 33,500 level I was talking about? So it's possibly going to come down to retracing here, but we'll see if this level now can hold as those bids. Remember, this was that area we had to break. We broke it. It scaled up there. We got an additional 10-15 pips, but now it came into a next level area where there's offers and pushing it back down to see if we can transact back in here, and if it can hold, maybe we get that healthy move, continuing to come right back up to test those offers. Okay, and so we're following yesterday a big bearish body. Today we opened bullish. Okay, is it an ignited candle? No, but it's still got a little small wick. So it was just a little bearish move when it opens, and it came up strong. Okay, came up to make our high of the day, and then we got rejected, and this is where we are now. Okay, so we've kind of understand where we can move to the upside. Also, from the high of the day all the way up to 50% of the candle, again for scalping purposes, maybe we got to find one more critical daily area, which could be right here, body and that wick. I know it's not much of a move, like from the purple line, which is 40, up to the yellow line, which is 57. That's about a 17 pip move from the purple to the yellow line. But for scalpers, that's quite a bit, okay? Especially scalping 5-minute candles on GBP USD. If you can scalp for a 15 pip trade, that's a nice scalp. Okay, and then if we push down and we break our low of the day, we may take out yesterday's low. Look at how critical yesterday's low is. Like, look at how strategically these things come down to these levels. Like, it's not just by luck how it came down here at 124.95. Look at the body at this area. Look at that wick getting rejected. This is just what I can see visually on our screen right now. If I was to go back in history, I guarantee you that this area would have played an impact at this area. So if we come back down here, we're going to look to break that and continue push down. Our bottom is right here. Okay, look at here. You have body. Then I just have breaker wicks down here that came down to 50% of this body. Guys, do we understand now? Like, are we getting a hang of what we're doing here? And this is daily candles. You can do this on 1-minute candles. You can do this on 5-minute candles. You can do this on 15-minute candles. You can do this on whatever time frame you want. This is price action. It has all the same characteristics. Okay? If I didn't tell you these were daily candles and I told you these were 5-minute candles, I do the same shit on 5-minute candles. Nothing changes. Okay? It's just these are daily candles. If you buy this candle or sell it, you maybe want to hold for multiple days, because that's what you're looking to do with daily candles. You're looking to hold these things. These are called swing trades or position trades. You're not looking to scalp the market with those. Okay, now we're going to move. We're going to start to break those daily candles now down to hourly candles. Okay, so here is this big red candle yesterday at 9 a.m. on news. Okay, so pushing down. What have we done since then? Been trading sideways. It pulled right back up to our daily high. Is it approximately half of that red candle? Not half of it. Half of it is more up here if I'm just eyeballing it. But it made a nice little retracement coming up to here and pushing down. But now we're barcoding. Okay, so look at where all the hourly volume is. Right in here. Red, green, red, green. Okay, are we building a little bit of an hourly support? Yeah, we're building a base right here. So I would draw maybe a white line right at the base of those hourly bodies. Right here, white line. Do we have some hourly resistance that we're trying to break? Currently, that's what we're trying to do right now. So if I was to look at that previous high wick, there's a wick, a body, and now we're kind of breaking above there. So that's where the volume is trapped. These are our impulse breaks. Now what we can do is we can go into the 5 minutes and look at how GU is moving. Okay, so these are our hourly areas. That's our high. I can see when we came up to our purple high, it got rejected 2 times up here. So that's telling me that there's some offers in the market up there. I put this red box up there. When we came down to the daily, the pullback, look at how we held the daily. Couple impulse moves, but we held the volume above. So it's telling me that there's a little bit of support still holding inside here. And then pattern wise, what do we have? So we came up with a nice strong move, kind of double top in itself, but this is one top, and then push down. Here's our neckline. We came right back up. Did we tap into the red box? Did we break out for a new higher high? No. We got 4 wicks right here at 125.34. That's showing a lower high. So it's telling me that the supply, the offers are being lowered in a block down here. What happened? Did we push all the way back down for this double bottom? No, not yet. So it's holding now this hourly support. Maybe we're going to push up and build here. If it breaks down here, then we're possibly going to come down here. If it comes with more momentum, we push, break this, we retest that, we flip it red, then all of a sudden we're shooting down and we're breaking our daily low, and then all of a sudden GU is down in here. Okay, so there's going to be more moves coming throughout the day, but this is where it's trading currently in the market. So later on, if it builds and it builds and it builds, and we have the potential to break out of its daily high, then maybe it's going to shoot up to that next daily area. But it could also come up to this area and get rejected, and it could get rejected hard. So that's why we watch for volume to close above, because it could be an impulse green candle and we all buy it before it closes, then all of a sudden it breaks the high, but then there's a ton of offers up there, and then it catches a wick, and then all of a sudden it gets rejected hard, it closes back below here, we're in drawdown, next candle opens, retests this, we're holding that big buy, then all of a sudden it's doing this, and then we get stopped out or we're holding at a loss. So you have to be careful at these daily high moves. Also look to the left of the chart. You can see exactly above here. Okay, so where could we potentially move to? So to that kind of that wick right there, or maybe up to there. So 125.50. So maybe like right around there. If there's like liquidity grab, it might break that purple line, come right up here, catch a wick, and go right back down. So you got to know too, when it's breaking, what could happen. See that the red line? So that's what I mean. It can break out up to there, to that red line, and get rejected and come down. If you're taking that like as an impulse trade, you know, that break candle and it comes up there, it's about 5 pips. You know, with like US 30, that's more like a 10-15 pip impulse move. That's why I like trading US 30. But for FX, that's 5 pips. So you got to be careful with those. Got to wait for that volume to maybe close above, retest, flip this green, build it, and then work it, and then come back up. Okay, and we're still building now. Maybe a little bit of support and base below this hourly area now. Okay, so you see how this is the bigger resting demand. We're building a little bit here, impulse move, but it got gobbled up and it closed above, retesting, continue push up. So we kind of got to break these 4 wicks right here, and then maybe we can test up there. So if it gets kind of rejected and it's coming down and break here, you could be looking to sell this area with volume closing below, and then take it down to the next block right there. Do the math. Put your ruler from here all the way down. That's 9 pips. Into the green box is 10 guys, okay? And that's a big move. That's a big move, but that's 10 pips, not 50 like if we're trading US 30 or something else. This is GBP USD. This is currency, guys. Completely different, okay? Different contract sizes, different volume in the candles. You have to understand. It looks like it's a big move, but that's only 10 pips. Halfway, let's say it breaks halfway down into here, 5 pips. And it could come down there. You could be in profit 5 pips, but then it could catch a wick and go right back up. So you have to understand what you're trading, guys. That's why it's not good to flip-flop from security, like go from GBP USD to gold to oil to US 30 back to you have to have the right mindset. So when I'm trading GBP USD, I trade this thing completely different than when I'm trading US 30. I just want to make that clear. I understand how this thing moves, and I need to use different, like a different strategy or different stop loss or a different take profit, the way how I trade this, than when I trade US 30, because it's completely different ball game. You can't use the same type of strategy the way you trade US 30 with Forex. It's completely different, okay? Once you guys understand that, Noor, how are we doing? See the pullback? Did we hold 500? 500, yes we did. So guys, look, we healthy pullback and continuing to test the highs. So we pulled back. Did we break or test this box? No. So pulled back, and look at, we got another ignited bar. Continue to come back up, and we're pushing, and maybe going to take out a new high. Okay, same with US 30. It was red, big red candle, but look at what happened. Did we take out 50% of this candle? No. So pullbacks are okay, guys. Like, don't be scared of pullbacks, unless real critical structure is breaking. If, like, this is how markets move. Without pullbacks, we're never going to make new higher highs. So, when we want uptrends, if we don't have healthy pullbacks, we're never going to have an uptrend in the market. Same with downtrends. When we're selling the market and it's trending down, it's a bearish day, it's not going to continue selling off if there's no healthy pullbacks. So everything sometimes comes back to the mean, and then it continues. So think about it. These are discount buyers. Maybe they're following this uptrend, but they don't want to buy the highs up here, but they want to be a buyer, but then they wait patiently for it to pull back into the bids, and then they buy. It's something like when you go shopping. You want something, but you don't want to buy at the high. Maybe tomorrow they're going to put it on sale 50%, and then you can buy it. We use the TV analogy, okay? So if those TVs are $1,000, then like right now on Friday, maybe they say Saturday, guys, we're gonna have a weekend sale. Those TVs tomorrow are gonna be $500. There's gonna be a lineup of people waiting at Walmart to buy all those TVs. So you got to look at the markets like that as well, guys. Okay. I know the pullbacks are gross when you're in buys and they pull back, but if you're patient enough to follow this trend, like as hard as it is, these buyers down here, there is some that are still holding because they're pushing this trend up. So how do they stomach all these pullbacks? Sometimes maybe if they get enough cushion, they walk away. Some people have to do that too. You and I, we're staring at the computer all day. So sometimes these candles affect us when we see a pullback. But what happens if you kind of bought here, you place your stop loss down here, and you went back to sleep, and now you wake up? You wouldn't even question it. You'd be like, holy wow, look at all the profit I'm in. But if some traders do that, I can't personally do that. I can't sleep when I'm in a trade. I tried it, I just can't. I give a lot of respect for those traders that can do it. I just can't. I need to be physically in these markets at all times. Trailing stop loss. The way how to do this is a trailing stop loss. So if you get a nice cushion, you buy like at the bottom. Now at each level, like when it comes up and pulls back here. Now if these guys, what I would do if I was these guys, if I bought in here, I watch it go up and then I'm holding this and then it moves away from here. Now my trailing stop loss is at this block. Then I watch the next block here where it moved up, it retested, pushed up, came back, retest. Now I move my trailing stop loss to this big block. So that's how I would do it if I was kind of trading like that. And now you know that 100 pips are secured. No matter what happens, 100 pips are secured, and this thing is continuing to drive. Look at it go, guys. Okay, so we're probably going to get DAX continuing breakout, but here goes US 30. So it pulled back, picked up all the bids, healthy bids. Now we're taking out those offers, taking them out. Short squeeze, taking these shorts for a ride. Okay, so we're breaking out, guys. Continuing. Right after that pullback, no real structure broke down. This thing is running now 45 pips. So retested, that was the buy. Yeah, that got scary right there. But pulled back. But if you trust your analysis, you trust your zones, and then the big ignited candle launched all of this and continued to ride. Next daily area is 33,503 up here, the yellow line. Okay, so also look here, guys. Okay, so these wicks right over here. We've got a few wicks right here. Okay, so we just tapped this area. We have to be careful at this red line, because when I look in the past, right over here, same thing. Look at, we came up, rejected, came up, rejected in this area, 33,480. But now we got maybe more volume. Maybe we can continue to drive. See RSI too. I want to show you guys this. Now it's showing divergence. Okay, we have a high, a higher high, a higher high. We've got the divergence now. We're showing bearish divergence where the strength is making lower high, lower high. But you have to be careful too, because there's a lot of shorts who are shorting and they're getting destroyed right now. So if you would like to look to short the market, I would look for volume to close back below that yellow line to entertain a sell option. That's what I would do if you're looking for a sell. Okay, and there goes DAX. Nice big body, breaking the previous high, continuing drive. Our hourly resistance for DAX is right up here, the white line, 15,936, if I can get up there. TPs, guys, it's all up to you. Like, don't follow me what I do with TP, because I might trade different than you guys. Like, I might be trading with a much bigger lot size and I'm looking for 15-20 pips. Okay, so you guys just manage your trades. When you guys are happy with some profit, you guys decide what you guys want to do. You need to learn that for yourselves. Okay, don't ask other people. I don't ask people when I'm trading what is their take profit. It's none of my business. That's their business. We got to worry about our own accounts, and you need to worry about like where you're happy with profit. Okay, everybody's different. Everyone's trading with different size accounts. Everyone's different trading with different lot sizes. So profit is completely different for everybody here. But if you want to watch the zones, you're more than welcome to do that. So if it can fill to the next daily, these are the higher time frames that maybe that's where you look to scale out. That's what I do. I chart these zones for you guys. So the same here. Like if DAX can fill up to that white line, that's a take profit. You've filled from 1 hour support all the way to the next hourly resistance. That's an entire zone fill. That should give you an idea of where to at least scale out some profit. What's gold doing? I'm scared to even look at it. Oh, it actually broke down. Okay, so gold broke down, but how did it break down? Okay, so it closed below that. Maybe that candle kind of stopped out some traders. It came and then came back down, closed, and then finally like the ignited bar push down. So it came down to the previous low, the daily low, 2005. That's a possible sell right there coming down. So that's good for 20, 25 pips on gold. Finally broke down if you guys got it. Okay, I'm not trading gold. Double top on oil. Okay, look at this. So now oil. Okay, if you are aggressive too now, guys, okay, I want to make this clear. If you're an aggressive trader, you can see one top, neckline. The second top got rejected hard at that daily, a shooting star candle, and now you got an ignited bar. This is an area for aggressive traders, scalpers, to trade right now. From here, coming back down there for 20 pips. Because they're playing this M pattern, the second leg is the bigger leg coming down with the volume. But here's the neckline. So if it can continue to push below this wick, see where we just came down to before I even placed it? Right at that wick. There's your tweezer bottom lows. So see what happens? It comes down, tests it, goes back up. When it's coming back up, it's coming back down with more volume. So this is that line that it needs to break. This is where aggressive scalpers come in. If this is too aggressive for you, you can wait. Like I say, always wait below there. Or you start to scalp if it can break there. But that's a nice entry right there on an impulse coming down, and look, and now it's breaking, so now it can push down. So that's oil. You can look on the second leg. It pinned it hard at the daily. It closed as a shooting star candle, and here's your ignited bar. So sometimes there's a time and place when to take these ignited candles, and if you take that, I don't know what your spreads are with oil, but coming down there, that's about 10 pips right now. If it can break, looking about 20. And gold too. Okay, so gold came down. Okay, it came down to a support level. So you need to make a decision, guys. It came down here. It came down, back up. It came down. This is when we did our top down. This purple line is 2005. That's our daily low. So now when it comes down, are we surprised that there's a green candle coming right back up? I'm not surprised. I don't know. Maybe some of you guys are surprised. I'm not. That's why when it drops down to there, someone was asking, Ron, where do you take profit? I'm telling you, that's exactly where I would be looking to take profit. That's why I draw these boxes. And then oil can close below the neckline, that's the big push, maybe a pullback, and continue to drive down. Okay, and looking at our indices, okay, again, pullback time now. So if we can pull back to maybe and hold this daily yellow line, like right there, maybe it pulls back again, maybe the bids can start to accumulate again and take us back up. But now things are getting, there's divergence, so things might break down coming into 5:30, 6 a.m. You got to be careful too. So if you are in profit, I would be running a trailing stop just in case it sells off. Oh, Wes, I like that. Gold is good to wear on my neck, not to trade it. Yeah. Gold is nice, guys, for jewelry, but if you want to trade it, it provides a lot of headaches. Okay, look at oil. Okay, so it came all the way down to the green box. If I took that red candle, I wish I did. I was looking at it, but I didn't have time. Right there, that break, it filled the beautiful 20 to 23 pips. And it came down to the green box. Doesn't get any more clear than that. When it comes down there, you know that that's a pool of bids. You need to make a decision when you're coming down there. Scalping, guys, this is scalping. If you're swing trading, completely different mindset. But if you want to be a scalper, you got to make snappy decisions. Because a lot of times you scalp, you go and profit 10, 20, 30 pips, all of a sudden it catches a wick, and all of a sudden it's coming right back up to your break even or your stop loss in a matter of minutes. So you got to get used to what you're trading, how you're trading, what time frame you're trading. Those things will help you as a trader. Watch GBP USD, very, very similar pattern. M top, coming down, and there's the neckline that it's looking to break. Anton, by scalping, you're restricted by one move. Not necessarily by one move, but you should have targets when you're scalping. Um, you lower your expectations as a scalper, and you can have more consistent trades if you know what you're doing. But yeah, scalping is not for everyone, Anton. So I want to make that clear. If you don't understand scalping, you gotta take your time to understand how it works. Not just the candles, your mindset. Getting into a trade for maybe a minute and you might be up 20, 30 pips in 1 minute. And then you got to make a decision. A lot of traders just can't make that decision in 1 minute or 2 minutes. Or if you go in drawdown right away in 30 seconds or 1 minute, you got to make a decision. Some traders cannot react fast enough. There's other people that are born to scalp and it's just in their blood. Swinging has a much higher probability to win. I'll debate you all day. I'll probably say I have a higher probability scalping than you do swing trading. And I probably have a higher probability of more pips than you swing trading. I'll contest you. I know a lot of swing traders who have a lot of difficulty swing trading. And they work very hard all week to try and make 100, 200 pips when, like some of us, we can come in the markets and make 100, 200, 300, 500 pips scalping a day with high probability by being patient and disciplined. I'll challenge anyone. I don't care. I got nothing to hide. Results speak for themselves. I used to swing trade. I know all about it, guys. I've done it for years. I know all about the results of swing trading. I've been there, I've done it, and I know I was holding daily trades where I was up 100, 200, 300 pips, and then all of a sudden, like one swap session, they liquidated me hard. Oh, I'll never forget those days. When should you enter GU? Let's take a look. Okay, so GU, it's see, the trade is already moving. Okay, so like the second leg is always the powerful leg on the M pattern. Okay, so it came up, back down, closed right here. So now we pushed down, so it broke that low. Oh, tweezer low right here, equal low. Okay, so if you didn't enter in GU right now, okay, so if you didn't enter, okay, this is if you didn't. You got to watch this candle to close in 90 seconds. Maybe we get a pullback coming up here. So if you're not in a trade, some traders, again, they short the second leg. Some traders are trading the candle leading in, kind of like how oil was moving. If you're not in a trade, now we got to watch how this body will close. So it came all the way down, but look at now, it's coming all the way back up. So it's going to close in 60 seconds. Okay, so look guys, okay, so it was basically an impulse break. Okay, so if you went in, it came down to the previous low, broke it, coming right back up. So let's see how it's going to close in the next 20 seconds. Okay, so it closed as a bullish pin bar. So we're right in this area. Again, it's opening green. So did we close with the volume we wanted below there? Not yet. Okay. Now it could come down. So again, if you take this sell, it's still, you're still taking like basically an impulse candle. Okay. Look at it, came all the way down, came all the way back up, closed, came down, catching a wick and coming back up. So I wouldn't look for a sell yet, Malik, just because of, look at the rejection. Okay, so if we took a sell, we took it on impulse, and now we're in drawdown. If we're waiting for volume to close below, no volume close below yet. Okay, so no sell yet on GU. Now we watch to see if it can come up to, again, let's see, 50% of the body of this previous candle right there, 125.28. If it can hold below there, and then some selling pressure can maybe continue to push it down right here. Then maybe, yeah, see that rejection? So that helps. But then let's see if it can come back down and close below here again. Okay, so we got to be patient with this. Okay, so no sell on GBP USD. It's working the neckline. We're working the neckline right now. Again, it came up to about 50% of that candle. Nice rejection. So let's see if the selling pressure can push this candle back down into there and close below there. Guys, US 30 is breaking down. Okay, so all of those buyers that got trapped continuing buying highs up here. There's a pullback. Again, is it going to be a healthy pullback to this area, or is it really going to break down now? So this is where we're getting closer to 6 a.m. So things can start to change direction, leading more into New York. So London, we had a nice push, but things can reverse going into New York. So that's why no sell, Malik, no sell on GU, nothing. Okay, if you did, you went on, unfortunately, on an impulse candle because no volume closed below there. So now it broke 50%. Coming up, testing there, so nothing on GU yet. Okay, but follow the volume. Came up here, big rejection again, coming back down. 2 more minutes to go. Lots of time on the candle. Did they really pin it now and then pushing it down? So let's see again if it will push and close below there. Yes, guys, see how US 30 now is breaking down? Okay, so offers control now the market. Kind of like a head and shoulder too. Left shoulder, there's the head, right shoulder breaking down. And then we're taking out that critical area, 33,500 level, where all those bids were holding. Now the market can shift in the other direction. So things that go up don't go up forever. Like, let's take a look at US 30. See what I mean, guys? Okay, so there was the high up there, came up to that previous red line where we got to the left of the chart, then it broke down. Here was a nice sell opportunity. Man, I just missed another sell scalp right here. Close below, I would have flipped that, ignited candle. Not going to say 100% I would have taken that because I don't do what it should have, could have, but that's the type of trade I like, coming right down to there. I know the size of my US 30 candles, and that's about 15 pips. But we're holding this level again, okay? So it's if it holds this and comes back up, it's respecting this. Didn't really break this structure down. It broke this previous level, but not the real base over here that started this entire move. So it's very interesting. It's this critical level, 33,500, this psychological level. It's a big fight for this level. And DAX retraced right back down to here too, and maybe it's going to build So you got to watch also like this RSI too. Some traders see this. It had bearish divergence. It could be this leg that's pushing down, but it could come down here and that's it. It's cooled off the RSI and then come right back into this demand, pick up bids, then all of a sudden RSI is shooting right back up. Noor, have a good sleep. I wish I could go back to sleep too. But this is Fridays are my long days, guys. So I'm gonna stay with us till about 6:30. Then I'm gonna go to the coffee shop, get a coffee because I cannot fall asleep. Because then 7:30 we start our Wall Street session, and then I go till about 10:30. So it's a long day trading for me. Starting this London on Fridays, like from 3 till about 10:30. So it's like a 7-8 hour session. No, if you're tired, Noor, go back, get some sleep because you got to rest your brain too as a trader because when you're tired, I can tell you can make a lot of mental mistakes, things like that. So it's not worth it. Make sure if to everybody, make sure when you're trading, guys, you guys are well rested because you can make a lot of mental mistakes when you're really tired. I'd made them a lot too when I used to trade. I used to trade 24 hours a day scalping 1 minute candles. And believe me, I was tired doing those sessions and made some mental mistakes. But that's when I was grinding. Those were when I was younger. I didn't have kids. I learned what I was doing in the markets, and that's when I really wanted to compound my accounts. That's when I said, I don't have kids, so I got to put in the time now. Now that I have kids, I kind of scale my trading back. I have different goals now as I got older. Um, but when I was younger, guys, I put in the work. Dave is in private Zoom on New York. He does Tuesday, Wednesday, Thursdays, and I do Monday, Fridays. Give Dave a little bit of a break from YouTube. It's not easy, guys. I'm going to be honest with you. It's not easy to trade in front of an audience because some people, just it's just I don't know. It's not easy, guys. I'll be honest. It's not. Because there's a lot of everyone's asking questions. Everyone's asking, go to this chart, go to that chart. It's a lot to like trading itself is hard enough, guys. You guys probably know. And then now when we're doing multi charts, trying to help everyone with questions, and so it's not easy. It's overwhelming. So for some people, sometimes once in a while, you need a little bit of break. Trista, you guys are getting a Tim Hortons near you in Texas? That's when I come to my Cowboys games. I'll be getting Tim Hortons there. They just released the NFL schedule, guys. Um, Dallas Cowboys are coming to Buffalo. And I was hoping that it would be a September, October, or early November game. It's December the 17th. I have season tickets to Buffalo, and December it's like I've been to football games there, and it's like minus 30, minus 40 degrees. It is freezing cold in there. And Dallas is coming December 17th. I'll be going to that game, but man, it's freezing in there. Tim Hortons in China, really? I had no idea that Tim Hortons is in China. That's unbelievable. Okay, so is it safe to say that GBP USD was not a good sell down here with no volume closing below. And look at it, a big double bottom, and actually was maybe a possible better buy than a sell down here. Ruben, about emails, like, okay, so I can't answer your email right now because we're trading live, but admin will get to you guys. It's not just you, Ruben, who's emailing. There's sometimes we get 100, 200 emails a day, so it's hard to get to everybody, okay? But we will get to you, 100%. Can you trade DXY? Yeah, absolutely, Richard. You can trade DXY. Um, it's not the best to trade to scalp, but its ticker for me is USDX. I have a spread of 1.4 to 2.4 pips, um, but you can absolutely trade it with brokers. Look for the ticker USDX. Yeah, Erwin, we'll get you guys all caught up. We went through maintenance last week on the website, so that's why that Discord link it needs to be manually updated. So admin will get you guys. Okay. Okay. So what DAX has not broke down, guys. Okay. So it's still holding potential buys. US 30 came right down to that local area right over here, that 500 level. And do you guys know what this red bubble is, what it represents down here? Okay, so let's learn as well while we got some time here. Do you guys know what happened here? Okay, I know everyone sees a red bubble, but what does this represent? Erythrin trapped volume, trapped sellers. Yeah, so what happened here was there was an selling pressure that pushed down, but remember, this is a critical area in the market where there was those bids waiting to get filled at this level. So they got filled, but these sellers that took that sell on this candle, here it is, they were selling, 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 selling. Then all of a sudden we hit this green box. That's where that area was, 33,500, the yellow line, and it filled with those bids. So that's why the wick got rejected, and we have like a little spin top, like a rest, pause, and then we're coming up bullish. So these sellers that hit down there, if they maybe didn't profit, they are now trapped in there. Okay, so sometimes when you and I, we scalp, we sell, we get up 10, 15 pips, we close our position, we're out. These traders unfortunately didn't close their position. They're holding in drawdown right now. Okay, so they're trapped down there. They're either going to get their stop loss hit up here if they have a physical stop in the market, or they're just holding in drawdown. Okay, so they're stuck down there. So maybe the market will come back to potentially, like, think about yourself as a trader when you're in drawdown. Okay, you're holding 10, 15, 20 pips in drawdown. What do you hope for if you're not closing the trade? You hope that the market's going to come back down where you get break even and possibly break, and then you go into profit. So that's what could happen. But it's showing that there was, and then the kind of exhaustion where it pushed down. The bids kind of just took it right back up. So no more selling pressure kind of really came back in the market because the market moved away from them. So it's showing that there was a lack of selling pressure when it came down here. So that's why it's easy for the bids to continue to accumulate and take it back up to the offers. But now the offers, okay, so we're pulling back into a lower high. Do you see, like here where I have the red box to show you that now we're walking right back into the daily and there's supply. So right here, it came, pulled back, now it's pushing right back down. So when we have this type of trading where it comes down, goes up, comes up, goes down, this is where I like to consolidate the zone, because now I can see that the market is accumulating. It's taking bids in the market up, it's taking offers, and it's going down. It might trade sideways in here for a little bit, might come up to the red box, go back down to, and trade in here. So then sometimes you and I, we got to be patient, and maybe we wait for maybe this area to potentially break. Like maybe it will come back down, recover these sellers, and then we actually break this 498,500 level, and then the depth of market starts to turn red, and we start breaking down in here. But that's one level we have to watch for a later time, because right now we have to focus on this area, this daily and this supply area. If we start bringing up the bids above here again, we might come back up to test this high, and then we fill up this imbalance, and then maybe we break out for another one. So if we're kind of looking for maybe another potential buy, we could be looking above this red box. But you have to be careful too, because it could maybe be forming like a head and shoulder pattern. So like in here, left shoulder, the head that broke out, this could be the right shoulder that dipped, coming back up here, and then going to push down, trade back down in here, and then have the bigger drop later at maybe like 6 a.m. So maybe they're just coming up to, again, to trap some buyers, and then they're going to push it right back down. So you have to be careful. You got to know like where you're trading in the market, what like where you're at. So this could be the right shoulder that they're coming up, last bit of liquidity, hit some pending orders, and they're going to bring it down. Kind of like what DAX is doing, where it's coming up, getting rejected. So if the kind of DAX breaks this, maybe it could look for a potential sell below here. Okay, gold breaking down, guys. So gold is maybe it's a bearish flag, a very, very tight one, but we broke down, bearish flag, then it pushed all the way down. Now it's retesting, so you can kind of flip this green box red, and we'll see if gold can maybe now start to push all the way back down to maybe 2,000. Oil, okay, nice little bounce buy off of here. Okay, so I look only for sells if volume kind of closes below this area. But I was telling you guys the other day, you could also look, if it doesn't sell below here, you can buy. Okay, so we'll do that on another day where I'm kind of introducing this to a lot of traders. I just want to teach maybe the basics, like if you break a demand and with the retest and confirmation, because then the next part of the puzzle is if it doesn't break and it holds, you're holding demand. Sometimes it's a liquidity grab and then it builds and you can go into a buy. You can absolutely do that. But also like GBP USD was very, very similar. Okay, like right here on this play where it didn't break, where we were looking for that sell position down there, but it didn't. It came back up. So you could essentially buy above that demand and take it right back up. Now it's coming back down with volume again to possibly close. If this volume closes below, retest, then we can possibly, you can get into a short position on GBP USD. Okay, so you can see it's holding up here, lots of resistance. Those 4 wicks. There's two more wicks, 2 more wicks. So you're seeing it's trading inside here, but it's really pushing down now with volume. So this is going to close in 60 seconds. Maybe this might be our confirmed candle to close below this level. It just pushed for the new lower low. So that's important to continue with a downtrend. Again, we got to go through this to see if it will close. So I don't want it to get another wick and come all the way back up again. Wow, look at the 15-minute volume. Okay, green, red, green, red, green, red coming down hard. They're going to close in 5 more minutes. So, like this is GBP USD. Trades a little different, but let's see how it closes. 20 seconds. Okay, and then you guys got to know the different things that can happen on the close of this candle. If it closes near the low, it could be an ignited red candle and just open and just drop. Okay, if it's got a little bit of a wick, then it's showing us that maybe it's going to turn green and come up, like right now. If it turns green, it can possibly come back up to retest this red box up here. If it doesn't, maybe it catches a wick right here, lower high, and then breaks. So what we're looking for is to break this low, our previous low, but we cannot like sell a green candle yet because now it's coming up, maybe for the official retest. Comes up here, maybe catches a wick, then push down. It could flag in this area. That's another thing. Like could create a flag in here, maybe trade sideways below the supply area. And then if you were looking for a sell, your next thing is once you hit the sell button, your job as a trader is to locate where your stop loss is going to be. So if some traders take the sell, they might put their stop loss. Okay, look now. Okay, so we retested. It's a shooting star candle pushing down. So as soon as it breaks, I'm going to hit the sell button on GBP USD. That's it. I got in a little late. I should have got in a little earlier, but yeah. So I'm in a sell. Okay, now I'm looking for it to push down into this demand area and possibly with this momentum to now physically break this demand area. Now stop loss, as I was talking about. Okay, so anywhere where you took the trade. Okay, if you're in a sell, now you got to look above us. What do we have above us? What type of structure? Where do we want to place our stop loss? Some traders, like I say, place it 50% of that red bearish candle right there. Okay, you could do that. Some traders might be above the high of this wick that started this candle. Some traders have their stop loss in this big red box up here because they feel safe up there having it. Okay, so I'm in profit right now. I have a zero spread on GBP USD, but it's not a crazy massive move, but it's in profit. Okay, so the break, like the total from here, if it comes down here is 6-7 pips. Okay, I'm only up 3 because I got in a little late on that move. But maybe we get a bigger move. Maybe with this momentum, we push into this green box. I'm going to assume that it's going to get a wick or possibly the next candle will open up green. But what we're looking for is maybe to measure 50% of this volume. If there's a pullback, then we continue and then we get this nice physical break of this box, then we start dropping down further. Okay, but I don't know where some of you guys hit the sell. Some of you guys were in a little earlier, so maybe if you guys were selling up here or here, if you guys want to go to a break even to kind of reduce your risk, but I would, I would let this thing play out. This is not bad. So it filled the entire zone to the green box. Let's see if we can continue pushing with that 15-minute volume. All of this barcoding now. Like look at this 15-minute candle that's going to close in a minute and 30 seconds. Yes, so it's pushing down through here. If we can get that 15-minute volume to close below that white line, we have 15-minute volume closing below hourly support. Maybe next 15 minutes can finish this move and come and take out the purple line, the daily low down there. Okay, there we go. Did anybody take this GBP USD sell? Like if this was a US 30 candle, this would be really nice. Like this would be 20, 30 pips right now. And when we're looking at GBP USD, it's a nice big red base candle, 7-8 pips. Okay, so there's nothing we can do about that. That's Forex, guys. But it's dropping nicely. Like it's beautiful. It's a full body. Yeah, Ruben, I took it too. I got in late too. There's nothing I can do about it. I should have taken, like when it was right there, I was waiting for the break, but when it broke, it just broke and shot down here. So sometimes, just intuition. When you see it retest and come down, maybe that's where you got to hit the sell button and then then you get rewarded. But it's give or take. It's give or take always. Sometimes when I wait for that break, it's just a tiny break like this, and then it hangs out there. Then all of a sudden I get the big drop. So it's give or take. It's give or take. That's how these markets move. Okay, so did you guys see that that first sell opportunity didn't really materialize because no volume closed below, so it had to come back up again into the supply, more supply. Finally, we got the candle that closed below, so there was the retest and the sell. Does that make sense, guys? So the first one was an impulse, no sell. You guys asked me, and I was waiting, and then it came up, and I said no sell. So then it came up buy. But this candle actually closed below, retested. That's why we sold. Okay, now pullback. Okay, so if it pulls back into half of this red body, like right there, 125.20, that could be the possible area where it comes back to retest. If we can stay below this area, then maybe we're going to continue to get some offers in the market that will push this thing down to break this. This is this critical green box. Like it came down and shot this move up here. It came down again, so I'm not surprised that it's green in here because it's a demand pool. But now we're coming up and getting rejected, so that's good. If we can close below the white line right here, the white line, that's that hourly support. If we can get volume to close below there, especially that 15-minute candle, like over here, how we did. Now we see how the 15-minute candle is a shooting star candle. Yes. So if it breaks, we're going to continue. Maybe hopefully break this low right here. And 125.13. Then we can come down to this level, 125.10, right in here. Okay, so you see we're following now the 15-minute candle. It came up. Hopefully we can continue to push and break down here, catch a few more pips on GBP USD. But some traders who trade scalp GU, they're happy with 5-10 pip moves. They know how it trades. Are you looking to add another position? No, I'm not looking to add another position. Okay, see how it pulled back? Did we tap 50%? No. So we got lower wick, we got the shooting star candle pushing down. That's what we want. We want to tap this red line. Okay, that was that previous 15-minute candle that came down here at 3:55 a.m. Eastern. So that's kind of that next break that we want. I was right about gold going down 2000. Oh, I didn't even look at gold. Did it go down there? Yeah, almost. Yeah. Oh, yeah, it did. Yeah, 2000, just below 2001. Yeah. So its daily area right here is 1999, just by 2000. But 2000 is a psychological area in the market. You should always understand these zones. 2000, 2050, 1950, like these 1900. These are all like you don't even have to chart anything. You should always know that these are critical levels. But gold, yeah. So if you were patient with gold, it's not for me in London, but yeah, it broke down nicely. It came down lower low, pulled back, all lower high rejection wicks. Here's your broke down, you close below. Here's that bearish flag that consolidated nicely. It closed below the daily purple line, 2005. We retested, and there's your push down all the way down to almost the next daily area into that 2000. So if you guys got in gold, congrats. And you guys held all that. That's respectable. You gotta have extreme patience for that. But pretty good, guys. Oil is gone. It broke above daily retest. Oil is gone. Like you could have got into an oil trade right there. You don't need to wait for me, guys, to tell you what to do. You guys can. I provide the levels, guys. You guys got to do a little bit legwork too yourselves, because I can't get in everything here. But what else do you want? Like this candle physically closed above the previous highs, above the daily. There's your retest. It came down, retested perfectly. You could have bought, stop loss below here or here. Now you're running it up, possibly to the next daily yellow line. So like oil, if you bought this move, 20 pips. a little more, 20 up to there, 30. This is why it's important, guys, to stay with one or two securities, because you can really follow the moves. Like here, we're looking at GBP USD. We missed out maybe on a move on oil, or maybe US 30 and things like that. Okay, so it's nice that we do this for everybody because everybody's trading something different. But I'm just saying, for you guys, when you're trading by yourself, when you guys are trading by yourself, try and focus on one or two securities and give it all your attention, because the volume will move up and down every single day. But if you're watching it, you can follow it and you can trail it. You can trade with it, as opposed to if you look at GBP USD, you get off of gold, then you go to US 30, you might miss some moves, and then you might take a trade on another one, but you weren't watching it. You just rushed into a trade because you see a red candle, but you're not watching the zones, and it might get very confusing unless you can do multi-chart trading, multitasking, and things like that. But it's not always for everybody. Okay, and similar with US 30. Okay, we came down. It's got a nice little double bottom. Okay, came down. The neckline, red box, daily area, came back down, picking up the bids again. So let's see if we can push on US 30, close above the red box, maybe close, retest this, and then push back up and take out this high again, the red line, maybe for a bigger, higher high. And I also look at the time too. 6 a.m. is in eight more minutes. 7-8 minutes. Okay, so we have to be ready for 6 a.m. 6 a.m. is a very volatile time in the markets. It's pre-market trading for New York Stock Exchange. Okay, so hopefully some of you guys are aware of that. If you do pre-market equities trading, that's when the pre-market opens up. So pre-market affects Dow, Nasdaq, the equities in there. So that's when we start to get some moves at 6 a.m. So gold will possibly maybe tap down into here, 2000, and might be a good bounce buy. Okay, but like RSI is down to 23, 24, but maybe you got to let it bleed out into here. It could come back up, pull back into 2003, push down, maybe trade in here for a little bit, but use these levels throughout your trading. Continue. And then GBP USD, okay, so it's just trading now, consolidating below 50% of that volume right at this demand area. So it might flag down here too and take its time and maybe further break down. But 6 a.m. could open up with some demand and this thing pops right back up to here. Dimitri, when will we do stocks? We'll do stocks when we're ready to introduce stocks. Right now, we want to make sure everyone learns Forex and can master Forex. We don't want to confuse people by going into stocks and options right now, because believe it or not, option trading is much more difficult than Forex. Forex is just hitting a buy and sell button. Options takes a lot more knowledge and education. There's a lot that goes into options. So we don't like to confuse people here. We like to make sure that they master something, then we can learn something new. And also it takes time to do that. I'm not sure if you guys are aware, but I only sleep like 2 hours a day. So trying my hardest, but I'm only one person here. Like I can only do so much. CFDs, yeah, you can trade CFD stocks, but you don't own anything. Okay, so again, you don't own anything with the CFD. You can trade them with your broker, but you can be liquidated and you're using leverage that can burn your account. When you're actually trading physical options and stocks, you own it. So it's much different. So that comes with the education too. So you got to learn what are CFDs, what are actually physically trading options and stocks and owning that equity. Okay, so we're gonna go into 6 a.m. guys. I'm gonna just go till about 6:15, 6:30. I'm gonna take a little bit of a break. I'm gonna go grab myself a coffee. And guys, snipers, I'll be back for our New York session, 7:30 till 10:30 we'll go. And if PK is feeling much better, then hopefully he's feeling better, and then he'll do a post New York. But it's not easy when you get an ear infection and sinus infection. I know it's horrible. My daughter used to always get those. Okay, and then guys, there's big moves now, like right before volatility comes in the market. So 5:55, 6 a.m. If you guys trade this time, you guys got to be aware that volatility kicks in now. Okay, so did we close above here on US 30? No. Are we coming back down to this demand area? Yes. So could it be a possible head and shoulder pattern? Quite possibly. Like inside here was the left shoulder. We still have our head that broke out. We're inside, still in our right shoulder. Couple false breaks up here. So if this red volume, 6 a.m., can push back down, break this green box, take out that low, maybe we push, pull back into here, maybe red box, and then it breaks down into here. So like some traders are getting in early. They're selling right now. You can physically see in the body of the candle. So there's some traders selling right now, but you got to be aware when 6 a.m. pops, could be a reversal and a candle go right back up. Sometimes if you're in a sell, you get lucky and then it continues selling down. That's great. But do you want to get in a habit of always trading right before a critical hourly candle, or taking a move like right before Wall Street? They want you to bait you in like that, and they might reverse it hard on you, and you got to be careful because then the volatility, the volume will not be these smaller candles. They're bigger candles, and then if you have a 10, 20, 30 pip stop loss, you'll possibly get stopped out of the market. Okay, so gold pulling back up. A nice drop on gold, guys. So you got to reward yourself. If you held all of that, okay, you got to reward yourself or take some partials off the table. Unless you have different intentions, like GBP USD. See why these things, like, they drop for 5, 10 pips into the demand and boom, they pop right back up. So you got to be very, very careful with it, okay? I didn't take out any profit and I got hit on my break even. Okay, I was looking for more than 6 pips, and again, that's why I don't really feel comfortable scalping GBP USD anymore like I used to. I just can't get out after 6 or 8 pips. I get burned too many times with these things. So I got stopped out at break even. Hey Taha, no, I'm all good. Just a little tired, bro. End of the week, I get a little tired. Okay, guys. So here's the close. We're going into 6 a.m. Be prepared for some volatility. Okay, so we're opening green. Again, let's see if we can test 50%. If not, maybe break this low. Okay, so it's coming up green, 50% right there. Can we hold it? No, so it's coming right back up. Okay, so those early sellers, okay, this is what happens sometimes. Okay, I want to make that clear. I think I've been clear this entire call. If you take some trades right before an hourly move, you got to expect a kind of a pullback, and you got to be able to stomach it. Sometimes it's a big green engulfing candle just shooting right through here. This is not bad. So it came up to about 50%, got rejected. GBP USD is like gold. It's just you got to have the right mindset for trading GBP USD, you know. So sometimes when I trade it, I know it moves 5-10 pips, and I trade GBP USD with larger lot sizing, because I to make up for those just 5-10 pip moves, because you're not always going to get 20, 30, 40, 50 pips on just scalping GBP USD unless there's a major momentum in the market or news. Otherwise, you're just trading for 5, 6, 7, 8 pips. Gold coming right back up. Okay, so the rejection wicks are telling you here at 2001, 2000. Okay, that level. Now it's pushing up. Oil, okay, pull back, holding. My oil might hit that daily $71 and some change. Yeah, so I took that down in there, got break even, kind of got slipped up too, a little bit, so I lost kind of 2 pips on GBP USD, but I don't. It's not for me, guys. Like I'm trading these because to get in with you guys, but to tell you the truth, I don't even know why I'm trading these things. I always tell myself I'm not gonna trade these. I'm not gonna trade these, and then I always get in them. Delana, what laptop do I recommend you trade? Your budget is $500. Just you don't need to have a laptop with all the bells and whistles. $500 will get you a really nice laptop. You can get some cheaper gaming ones. You could also, if you're looking refurbished, you know, if you don't want to go all out and buy a brand new one, there's so much used laptops you can find now that people, they buy them, they use them for a couple months, then they upgrade, and they're basically like a brand new laptop. They come with a good warranty too. You know, you don't have to go all in, buy the craziest laptops. Yeah, I would agree. Your internet should be, you should spend more on internet, good high speed internet, and invest your money on that. Maybe just a nice good quality laptop that can get you through, that works, but you don't need to get one that's super high power and unless you're going to have multi monitors and things like that. But just a basic laptop. There's good ones. Best Buy Best Buy has them. Um, some really nice ones. I got a really nice one on sale too. It's what is this? Pavilion, HP. It's a gaming one. It was regular $1,500, and Best Buy had it on sale for like a Black Friday deal, for $750. And I've had this one for a couple years now, and it's more than enough. You know what's the best? When you can trade with your old style, what you got, and maybe if you pass a prop firm, you get your first payout. Then we always say to guys to go out and maybe reward yourself, or if you're trading your own account and you get your first physical payday, like this week on a Friday, maybe you take out $500 you've been working on it. go out and buy yourself like a laptop or maybe a monitor, so physically, like, you can see the market, you rewarded yourself. Don't go spend it on silly stuff, but spend it on upgrading your trading room. It's nice. If you're going to spend all that time in there, hours and hours a day, make sure you got a nice comfortable chair. Make sure you got nice monitor, good size. You don't need to have 10 monitors, but maybe one or two monitors so you can actually look at different things. And yeah, don't forget a plan. Yeah, it doesn't matter what type of laptop or monitor or what type of internet you have. Um, if you don't have a trading plan or risk management, it doesn't matter. I know some people who spend $10,000 on their setups, but they have absolutely no trading plan, and then they just sell all of their laptops and all of their monitors 2 years later because they're not a trader anymore. So um, and you don't need to have all of that, to tell you the truth. Okay, that's only if you're sitting down at. I trade off my mobile. Okay, I scalp on my mobile phone. Do I need to have a laptop? Do I need to have monitors? Do I need to have all this? I don't. I'm fully capable for the last 20 years of scalping off my phone. Okay, so I'm telling you, when I go to the grocery store, I don't have a laptop and I don't have monitors. When I go pick up my kids at school or I'm driving them to school during Wall Street, I don't have a laptop and I don't have monitors. I'm scalping off my phone. If I'm with you guys in the mid-afternoon, if we're going out for a restaurant or we're having a coffee together, you will probably see me scalping with you while we're having lunch together. I'm scalping off my phone. So I'm telling you guys, you can do it with a cell phone if you want. I don't recommend that, but I've been doing that for a long time, so I got used to it. Okay, so US 30, we're in this consolidating box, red, green, red. Let's let it build. Let's let it come to us. We're looking for maybe that selling pressure down here. And then this might be like my last trade if I take one going into, because we're going to do New York after. You're scared to enter into a trade. Why? Like, why are you scared to enter into a trade? What is this? I can think of scarier things in life. Why are you scared to enter into a trade? If you're trading with proper risk management, if you're risking 1% per trade, what are we scared of? You need to literally lose 100 trades in a row to lose your money. So if you're risking 1%, what are we scared of? What is the worst that can happen? We get stopped out. As long as you're still breathing, life still goes on. What are we scared about? We have to overcome this, guys. We got to overcome the fear. If you're scared to take trades, there's got to be a reason why. Maybe in the past you've taken a lot of losses. That could be one reason why you're scared to take trades now. But you've got to change your psychology. You got to fix your mindset. Maybe you were trading with the wrong risk management before. You were taking. That's why you got scared, because you took big losses. Yeah, we're all scared of losing their money. You don't think I'm scared of losing my money too? I'm. But when you've done all of your analysis, okay. Number one, we're not just jumping in on every single candle. Yesterday. We waited 90 minutes in the New York afternoon session to hit some trades. So if you're waiting patiently and you wait for a structure to break, you wait for a retest, you put a proper stop loss in the market to allow it to breathe, and you're not risking your entire account, then there's nothing to be scared of. You have to learn how to live with this. You got to learn how to trade and learn that there's going to be losses. but the losses can be managed. If you find when you're taking a trade too and you're panicking in the trade when you see a little bit of drawdown, I can tell you that you need to fix that before we move forward. Because if you don't learn these concepts, trading is going to be very difficult for you. Okay, so look at US 30 now. We broke down. Okay, now testing this box area that we're trying to break. I'm gonna make it red now to see if we can kind of hold down below here. So I'm assuming that there's going to be a pullback. DAX is right below this as well. Okay, so pull back. Okay, it's expected. Came into that green box, pulling back, testing 50% of this candle. Yeah, Rob, that's a great point. You should, if you're taking a trade, you should be able to have a conversation with somebody. You should be able to maybe do some other things without just staring at your MT4. Because if you take a trade, put your stop loss, you're not risking, you can allow it to breathe. But that's why that 1% risk is very important. I see traders who are risking 10% per trade. That's a lot. See some traders that are over leveraging huge. They're risking 20-30% per trade. I would be panicking too if I was risking 20% of my entire account on one trade. Hell yeah, I would be panicking. Anybody would. But this is what you need to learn as a trader, is if you're scared right now, then stop trading with real money. Go on a demo account. Learn how to trade to conquer your fears, then come into the market again with real money. But if you're scared right now with real money, you're not going to learn anything. You're just learning how to be more scared. Sometimes, guys, check your ego at the door, stop trading with real money, and go on a demo account and learn how to really do this. Then once you learn how to do this, then you can go back into the market with real money, but hopefully you've learned to conquer your fears. But treat the demo as if it's real money. Don't play games with it. Jane, is it not risky driving and trading? Why? Who told you I trade and drive? Yes, I agree with you guys. Please do not be trading and driving a vehicle. Keep your eyes on the road. How am I entering the trades quickly? By hitting a sell or buy button on my phone. Yeah, I do scalp 1 minute candles in the car. Maybe I shouldn't say that. Okay. I don't want to get people now scalping in their cars. In the McDonald's drive-through, yeah, Rob. McDonald's drive-through, guys. When I'm not moving, when I'm waiting in there. Jade, no, I don't have magic keys. No. Just a simple MT4 on my phone. I'm watching exactly what's going on, and I hit the sell button when I'm ready to go. And then also when I'm in the trade, Jay, I automatically go to my close position to save like one step. So when I'm ready to close the trade, I'm just one click of a button and I'm closing the trade. If I'm looking to take partials, like for example, if I took a standard lot size, I'm already going on the close screen and I'm already putting in a 0.8 if I'm going to close 80%. And when I'm ready to close 80%, I'm hitting that close button. So I'm already like a couple steps ahead of, I've been doing this for a while, so I'm always a couple steps ahead. Should I have magic keys? Yeah, possibly. Guys, look at the pullback here. Okay, pullback on US 30. Now it's a nice bearish pin bar candle that's going to close in 20 seconds. Let's watch this bar close here. Shooting star. Really nice. Same with DAX. Okay, really nice. Came up, trapped that liquidity. We look like we could be breaking down here, so get ready. Let's watch this close. Maybe again, maybe another green pullback. Maybe it's short pullback. Maybe like get ready for an ignited bar, red candle. Okay, green. Okay, coming back into that red box, rejected. Let's see if this thing can reject and flip down bearish. Okay, still holding green in here. Now it's starting to break. Okay, you can see these bids over here. The offer is taking them out. So as soon as it breaks, we might walk down to this VWAP. Yep. Just testing. There's those tweezer bottoms. Right there, those tweezer bottoms. Okay, it's going to try and break that low. Yeah, sell. Yeah, I'm going to enter. Okay, so it had that big dip. It flipped. Okay, so back into the supply. If it can push down, then we're going to push with that volume. And maybe where could it possibly come down to? I'm going to say right over here. Yeah, I'm in sells, guys. I'm in sells. Yeah. And DAX is breaking down too. DAX is breaking down below here. Okay, so I'd like to see these offers maybe push all the way down to this yellow line, to this VWAP. Take out these bids. Hopefully we can break this thing down now. Yep, pushing down. Okay, from here to that red line, it's approximately maybe 10 pips down in here. Down into here is maybe 10 to 15. And then now we just got to kind of watch our offers. They're pretty balanced here too, but if we can really take these down, this level 33,500, we got to continue to watch this level. Remember where it was holding as those bids where we flipped it? Now we got those offers in place in this area. So we got to continue to watch this area 500 level to make sure that bids or offers can continue to populate, and then we get more offers above us in case there's going to be pullbacks. Okay, DAX is a nice red candle pushing down. Yep, there's the push. Okay, so we're just absorbing a lot of bids. But yeah, there it goes. There's the push down, guys. Okay, DAX is really nice. Yeah, DAX was really nice. Okay, so let's see if we can get it down to that VWAP, this yellow line. It's going to be wicks. Okay, understand that there's going to be wicks. Okay, but the wicks can get taken out just like that. Beautiful. See how we took that out? Guys, look at that. Look at all these offers in this place right here. Okay, so the books really changed here. Okay, so that came down, guys. You can go to a break even depending on how much you're. That's 10 pip drop. Okay, we're looking for to come into this green box into here, and maybe it can break more than 15 pips down into here. And then physical stop losses, if you're still holding, okay, like above zones, maybe you want to keep your stop above this area. You don't need to necessarily be this high. You can keep your stop 50% of this red candle, but could physically come back up to rotate, maybe take you out, but it could just pull back right into this red box and continue to drop down. Okay, because we're approaching the VWAP. So this is where we get a lot of liquidity in here, okay? So this is going to be that fight again down in here. So it's pulling back, but if offers continue to push the market down, we're going to come back down and transact. Maybe we will come and fill the wick again, come all the way down bearish, but this is going to be where the big fight will happen. Right here. This is that yellow critical area, the VWAP, and then also this demand area and the hourly support. What time is it? 6:20. Okay, guys, so I'm going to go about 10 more minutes, and then that's going to be it for me. Look at gold, guys. Okay, so gold, came down to roughly 2,000 area, and look at how it bounced right back up. So it might come right back into like this consolidated area. Maybe that could be an inverted head and shoulder pattern for later on. Okay, so here you have left shoulder, that inverted head. I saw some of you guys sell that, okay, but came down to this level, 2000, 2001, coming right back up as a V recovery. If it comes back and it trades inside this consolidated box, might develop like a bull flag, then break out like an inverted head and shoulder, then all of a sudden gold is coming back up to 2010. If it can hold below here, then maybe we'll come back down to half of this, 2003, then maybe back down to 2000 later. We'll revisit gold in more Wall Street session, guys. Our next session, we'll revisit gold, we'll revisit oil, we'll fix up our charts, we'll clean them up. GBP USD is bullish for now. Okay, so it just sold off to the demand and bounced right back up. And US 32 came all the way almost down to that demand and bouncing right back up. So the markets now are getting a little bit choppy right now. This is not the best time. Maybe you wait till 7, 8, 9 a.m. Again, look at your news. Forex Factory is not always the greatest for news. Sometimes it's lacking on some other news. You can look at FX Street, Bloomberg, there's investors.com. There's other platforms you can look for news. Maybe this one is missing something that we don't see. But going into 7 a.m., we've got some speakers, 8:30. And then the big one for New York is this, 10 a.m. prelim. The University of Michigan Consumer Sentiment Report comes out. It's a red folder, so it will have some significance on there. Where it will shake the market right after Wall Street. So you got to be careful trading, especially on a Friday too. Okay, so DAX is still breaking down. It broke the low, came up, got rejected, coming back down. So if DAX can continue to push and close below this green box, DAX can possibly break this hourly support in this daily area and then drop a little further. So we just got to continue watching what's going on here. Okay, so when it came, pulled back, lower high, lower low, lower high, lower low, lower high, lower low. Now we're looking for like a next lower high or to come into here, transact with these offers, and hopefully these offers can fill and push it right back down. Here's that 33,500 level. It's like a magnet that we're trading in. Yeah, guys, no problem. Thank you, guys, for it's not the easiest to get up and do London, guys. I'm gonna be honest with you. I'm not sure if some of you guys are trading always 1, 2, 3 a.m. Eastern or your early mornings. Okay, I know for some of you guys this is your 9 a.m. morning. It's nice. But for others like us in North America, this is a graveyard shift. It's not the greatest. Like that's why sometimes I don't have all the energy I normally have, like in when I'm trading New York. It's just because it's late hours. Sometimes I don't even sleep. I watch like NBA basketball, and there's some good games, and sometimes it turns into being all nighter. So I'm used to this, guys. I've been doing this for a long, long time. I know it might be like a surprise to some of you guys, but this is how I function. I've been doing this for almost half of my life. So I didn't start trading yesterday. I've been doing this for a long, long time. So I really do like educating, and don't want to miss this session with you guys. But would I continue to do this like now if I wasn't trading with you guys? Not every single London session, but what I would do is definitely get up and do my US 30 top down analysis. Maybe watch for the first 30-45 minutes of London market open, so you can see some of the traders when we traded that hit some goals and go right back to sleep. I used to do that. I used to be like a hit and run trader. I'd get up maybe 2:30, top down. By 3:30, I was asleep with 30, 50 pips in the bank. And then I would really focus on getting ready for the New York session. That's what I particularly like. Okay, guys. So I'm just gonna go and have some breakfast and get a coffee. Um, I'm still monitoring this US 30 sell. So like I said, stop loss either like at 50%, probably going to get tapped out here, but you kind of want to give it room to breathe at the next like kind of supply area. That's why sometimes if it's a big risk for you, you got to measure the moves. That's why this ruler is one of the handiest tools. A lot of traders don't understand that. Like if you have your stop loss here, you're measuring it. 50% of that is about 12 pips stop loss. If you're in this big red box, you're risking about 20 pips. But you're looking to come back down into this green box and break the box, because you're looking for more than a 15 pip move. But for some traders, like I'm going to be honest, selling this as it's coming down 5, 10 pips down into here. Some traders, that's it. That's their scalp, 10 pips. They're dipping out of the market. That's it. That's what some traders do. And I'm one of those guys. So sometimes that's exactly what I'm looking for. I'm looking for that break. I'm not looking for a huge move like other traders. I'm just looking for that red candle. That's it. Some traders are very surprised about trading like that, but I'm very surprised at you guys. I ask traders, then when you're scalping the markets, what are you looking for? Like, what are you physically looking for? You're looking for bigger breaks of structures, then that's going to require you holding trades in pullbacks, like we saw. If you're holding this entire move in an uptrend, you got to hold. But now a scalp turns into like a longer position trade. This break from here to there, that's a scalp. Quick, 1 minute, 2 minutes, you're in and out. If you don't understand this concept, then you really got to study what scalping is. That's why it's not for everybody. Tristan, a lot of traps happen at this time. Yeah, this time I'm normally asleep. I don't normally trade this time. So, do I take wins a lot smaller than risk? What do you mean by that? Do I take wins a lot smaller than risk? A lot of times when I take trades, being honest with you guys, I wait for proper setups. I get in, and some trades I take are zero drawdown, and they go right into profit. Other trades, yes, I do get stopped out, but I manage my risk. Like if I have a stop loss, I'm studying structure right here or here. I know if I'm right there, I'm risking 10 pips possible stop loss. If I'm up there, I'm risking 20. And when I do that, I calculate 10 or 20 pip risk with what lot size I'm going to use. So then if I'm using, for example, a standard lot, 10 pips, I lose $100. If I lose that same standard lot and I'm risking 20, I lose $200. I've already mentally put it in my head that I can physically lose $100 or $200. And if I'm okay with that, I'm not scared of the trade, I'm going in. If it's risking just 1% of my entire account, then I'm still okay with that. So These are things that you need to learn as traders. You know, you're not going to learn it right now in 5 minutes, but you got to maybe study over the weekend. Figure out your personal risk. Don't look at what other traders are trading their risk. I hate when people ask this. Ron, what's your risk? You don't know my trading account, so what would my risk have anything to do with you? You know, some of you guys are watching those traders on YouTube. They got $1 million accounts, and then you want to mimic your trading like them, but you can't because you're trading with $1,000. So their risk is completely different than yours. You need to focus on your account. That's what I see that traders are lacking. They're not focused on their own accounts. They're focused what someone else is trading. Focus on your account. That's what the problem is trading these days. Okay, guys, that's it for me. That's enough. I need to get a coffee because I'm getting really burnt out here. I've got to get some more fuel in me too. And I will see you guys. Okay, for YouTube, it's the weekend, so we're not going to do another session this afternoon. We're going to do a Wall Street session with the Zoom and have the private sessions continue on Friday. But everybody on YouTube, it was an exciting week. Make sure you subscribe to the channel. You hit that notification bell because I can pop up any time of the day. And we might change up the schedule too so that you guys are notified of everything going in the markets. Just make sure you guys hit that notification, and I hope you guys learned something new this week. I hope you guys had some fun. We had some really fun, especially in the New York afternoon session. Like, I really do enjoy that. I had a poll with the guys in Zoom today. I asked, did you guys want to do London today or New York? But London took over. London won. So we do polls and things like that. We ask members what session is better to do. And then we go with the poll. The members speak. And guys, stay tuned for the schedule coming up next week. You like my husky voice? Thank you. I'm glad you like it. Okay, everybody. Thank you, everybody. Have a great day. And Juma Mubarak. Enjoy your weekend, everybody. Okay, get some rest too. I know some of you guys are trading every single session. I see that too. So make sure you guys are getting some rest too. It's not always just trading. There's more to life than just trading. Enjoy your weekends. Enjoy the time off. Enjoy your family. Enjoy all of that stuff. That's the good stuff, is the weekends. Okay, you put in all the time trading Monday to Friday, but make sure you guys enjoy the weekends too. Don't just get consumed in charts and candles and bubbles. Make sure you enjoy the good part of life. Okay, and guys in Zoom, I'll see you guys in another hour. Let's all go get some breakfast, have a coffee, and we'll come back, okay? Have a good weekend, everyone. Thanks for joining everyone on YouTube. I appreciate all the likes, subscribes, and have a good day, everyone.
Hey guys, good morning. Welcome to another live session of Stocksnipertrading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our account's spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AAAFx, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, We have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.